All right. So, what is up for y'all on the YouTube replay? I hope you're having a great day. And just so you know, I'm going to be live in exactly 8 hours from now. It's currently 11:40 if you can see at the top of my screen, and for at my time, we're going to be streaming at basically 7:40 p.m. tonight when the stock market opens. And let me give you a quick stock portfolio update. We're actually doing pretty good year to date. We're up 15% year to date, and these are all the stocks that we own in here. And here's my total percent change on every stock. So luckily we are up on every stock in here except Carlisle Group right here. Or I mean, we're just barely up on them. And then we also have, and this is, by the way, I renamed this account to dividend only. If you see at the top left, so I only own dividend stocks in this portfolio, which is pretty cool. We also have a Roth IRA. If you're wondering what a Roth IRA is, it's just a tax-free retirement account, and these are all the stocks that I own in here. And we just recently bought some more Iron Mountain, Main Street Capital, and a little bit more CRMD. So yeah, these are all the stocks that we own in our Roth IRA, and we're actually at an all-time high. We actually made this account almost exactly a year ago. So when we click all-time in 1 year, the charts look pretty similar. And then we have everyone's favorite, my Webull portfolio. So this account right here, actually, let me make sure. There we go. So this account right here is like my risk on portfolio. So I own a lot of more risky stocks in here, but a lot of these have done very well. You know, with how the market's doing right now, stock market's at all-time high. A lot of the risky stuff is just going insane right now. So it's kind of good to be in these stocks, but I certainly wouldn't pay any of these current valuations. Like I wouldn't pay for Reddit, SoFi, Robinhood, AMD, like Super Micro. A lot of these stocks are at some pretty insane valuations, but some stocks that aren't at insane valuations are like Progressive Corp, TAP, even Sprouts Farmers Market. I love this one. Cooper said, I need help. QQQ versus QQQM. Can't decide long term. Well, you know what, Cooper? Let me decide for you, my friend. I would, if anyone's ever looking at the QQQ and you're like, should I buy the QQQ or QQQM? Always, always, always buy QQQM, because if you, for every $1,000 you put in QQQM versus QQQ, you're saving $15 in yearly fees. It's the exact same ETF. It only has a 0.15% expense ratio when the other one has a 0.3. So you actually are saving $15 a year per $1,000. And also, it's the exact same strategy. It's literally the exact same ETF with just a lower expense ratio, same NASDAQ 100 holdings, Microsoft, NVIDIA, Apple, all these companies I'd happily own individually, and I do own a lot of those stocks. So yeah, I love QQQM. I would just buy and hold that one forever. You know, it's kind of like a higher growth version of like the S&P 500. It's more tech heavy. The S&P 500 already is at an all-time high. So first off, no matter what, if you own the S&P 500, the NASDAQ 100, the Dow Jones, you're doing great just because of how the Mag 7 have done recently. Like NVIDIA's going nuts. NVIDIA took a stake in Intel, which was finally good to them. But yo, what up, Zach? You said Target stock. So you know what? There's one thing I find value in Target in, and that's their dividends. So check this out right here. You get a 5% dividend, but let me tell you why investors aren't too enthusiastic around Target right now. This is my own little conspiracy. First off, they're in a very low margin competitive business. 3 to 4% net margin business. They're seeing a lot of competition from, Walmart now does delivery of groceries, and Amazon now does in over 1,000 cities, same day delivery of groceries. So they're kind of being out innovated. They lost their growth year over year. You know, the revenue is actually down 1% year over year. Add inflation to that, not great. So the revenue's down 1 and the profits are down by 22. So that means margins are falling. But let me tell you, the one thing I like about Target is actually how safe the dividend is. Check this out right here. And I'll just show you the math for yourself, and then you can draw your own conclusion. Another reason Target is being hit way more than like a Walmart or Costco is because they're more discretionary. They sell more discretionary products other than food and beverage, which, you know, even in a recession, people still got to buy that. But yeah, they sell stuff like apparel, home furnishing and decorations, hard lines, and beauty products. 14% of Target's whole sales are just beauty products. So yeah, people are, and the beauty stocks have not been doing too well. Like you look at e.l.f., Estee Lauder, Ulta Beauty's done okay, but basically, yeah, they have a safe dividend. Actually, I forgot to show that real quick. Oops. Target was, they went through some woke stuff, which wasn't great. They lost a lot of their organic, like Target shoppers. A lot of people I know who are Target shoppers are no longer anymore. Yo, what up, Rowan? But here's how you can tell if the dividend is safe. Check this out. They made $935 million in net income just in the most recent quarter. And here's how you tell how much a dividend costs. You go to the cash flow statement and you go right here to see how much the dividend costs. And the dividend only cost $509 million in net income a quarter. So they actually have room to raise their dividend. I wouldn't be raising their dividend right now because it already has a high yield. And They kind of need to bring the growth back again. Low margin business, being out innovated, revenues down, margins are down year over year. I can totally understand why this stock isn't doing too well. I wouldn't make it as a huge position if you did want to buy them, but I can see some stuff on, can see some value. So another stock that has kind of not been doing too well is Lululemon. This is kind of like an apparel stock. A lot of the like premium priced product stocks are doing too well, like a Louis Vuitton stock, Gucci stock, via Keyring, like a lot, Lululemon, Nike, a lot, Under Armour even are not doing too well. One thing investors didn't like with Lululemon on their most recent earnings report, the reason they gapped down is because they lowered their guidance and they missed on their growth expectations. The North America, their main market, North America, USA, the sales only grew 1% year over year. So, that's not great. Comparable sales are only up 1% year over year. We really would like to see more growth, but the revenue in the US was only up 1, but internationally, the revenue was up 25. So when we combine those together, the revenue is up 6.5. But here's the thing, revenue grew 6.5, but the net income actually declined by 5. So what does that mean? That means the margins fell. Net margins fell by 11% year over year. Has anyone else noticed like the quality of their products have gone down? But one thing I do like that Lululemon still makes a lot of money. Like easily, they're making 300 to 400 million in net income a quarter. What is Lululemon doing with all that net income? Well, they're actually deploying it all into share buybacks. And I almost wish, like these were all very poorly timed. They could have bought, in some situations, 20 to 30% more shares if only they waited to do these buybacks. So these were poorly timed. But here's what the buybacks do for you. If we go to the net income fell by 5.6. But the net income per share is only down by 1.5 because the share part of the ratio went down a chunk. So that's what's kind of cool about the share buybacks. Oh, dude, someone said SoFi Technologies stock. Yo, yes, sir. I do own SoFi Technologies, by the way, in my Webull portfolio. So check this out right here. This is a stock I regret every share I've ever sold to this company, but yeah, we are up 394% on SoFi. Dude, this stock is at an all-time high. So first off, congrats if you own this name. We've been holding this one for many, many years. If we zoom out, this is where I bought my shares. Can you believe it? Way, way back here. So yeah. Let me give you a quick analysis on this. I really think SoFi deserves to be at this really high level, high premium valuation, but I'm certainly not buying the stock at this current valuation, but I'm also not selling anymore. So, hold on here. Oh my goodness. There we go. Sorry, I'm having trouble here with my thing. I do apologize. Okay, SoFi Technologies. So check this out. This stock, here's why I think they deserve to be at an all-time high. They're a fintech. They have their own banking charter. If we go to their financial services right here, this business is booming. This is why I think they deserve a high PE because they're high growth. This is abnormally high. The revenue's up 105% year over year after growing 80, after growing 222. Like the growth of their financial services business is insane. Not just their financial services, but also the lending side. If we go to their lending revenue, it's also at a record, up 30% year over year. So I really think people are just starting to take SoFi serious. They're really growthy. The revenue's up 42. They did 850 million in revenue. And out of this 850 million in revenue, legit 100 million of it was after tax net income. I mean, SoFi's making a healthy amount of profits. So, and they're also beating on analyst expectations. That's why they're gapping up so much on their actual earnings. Like, look, orange line's what the analysts expect. They expected 804. They reported 860. So I really think people are starting to take SoFi serious. Another company that the growth is finally back for is Celsius stock. If anyone's heard, yeah, that energy drink company. Yo, what up, Mats? Yeah. They actually just acquired Rockstar Beverage from Pepsi. Anyone remember that energy drink? They're kind of not too big anymore, but Celsius just got they just bought, well, Pepsi took a stake into Celsius, and for that stake, they gave them the Rockstar Beverage brand. So they're kind of backed by Pepsi now, which is pretty cool. And the growth is finally back also after their Alani acquisition. So if you're wondering, hey, how is this revenue up 83% year over year? Why did their assets just jump up a big, went from 1.8 to 3.8? What just happened there? Well, they actually just acquired Alani. And if we go to the shareholders, Alani owns 9% of all the shares. We can also just see that in the cash from investing activities. Whenever this is negative, that means they're investing in the business, just bought a company, just bought an asset, just bought land, whatever. So yeah, the growth is finally back for Celsius. They own some great brands. I do love Alani. Celsius is all right. I wonder how Rockstar will go. So yeah. Let's see here. Okay, sorry. Oh my goodness, this is frustrating me. Yo, what up, Kudo, the wealth? Good morning, man. Hope you're having a great Sunday. Yo, by the way, we're going to be live in exactly 8 hours from now as well. We're going to be doing another 2-3 hour stream later tonight. So, yeah, let's see here. Can we look at TLN? Is that Talent Energy? So, yeah, Talent Energy is one of the nuclear plays right now, and they actually just acquired a nuclear reactor. So, that's what's pretty cool right here. Um, um, All right. So, yeah, Talent Energy's at an all-time high. They're one of the nuclear plays. If we go to the growth expectations, I mean, they're beating on analyst expectations. They're expecting 460. They reported 630. But yeah, basically the growth of the futures, I wouldn't pay its current valuation. I'd much rather buy a CEG or a Vistra Energy as a main nuclear play, but this one's not bad. They actually just bought a nuclear reactor. There's only so many in the US, I think like under 50. They bought one. They overpaid a ridiculous amount for that nuclear reactor, but they kind of did the whole industry a favor, and it really made the valuation of every other nuclear reactor in the US go up because they just paid such a premium. So all the other nuclear reactor, all the other nuclear stocks are doing great as well. The best nuclear stock, if you want pure exposure, I think is CEG, Constellation Energy. They literally own 50% of all the US nuclear reactors. So yeah. Yeah, by the way, this is my dividend only portfolio. I renamed it. So this is my dividend only portfolio. This account right here, if you look in the top, is my buy and never sell portfolio. So once I buy a stock in here, I try not to ever sell it. So someone said Adobe. Yo, Adobe is one of those software names that have been getting crushed. You look at Salesforce, Workday, Adobe. A lot of the software names have been getting hit, but it's mainly from the AI thesis. People are saying, hey, in 10 years from now, will we need Photoshop? Will we need After Effects? Will we need all these applications? And I think the answer is yes. I think they're overpricing in how bad AI is going to hurt their business. I actually think they're going to be a slight AI winner. I always think humans are going to need the last touch for art and stuff. But yeah, they've ran down the valuation on this company. They're only trading at 22 times PE. That what a PE means is that's how that means you're trading at 22 times net income. It's just the net income multiple plus any share buybacks or dilution, and they're doing a lot of share buybacks. And the weird thing is they're beating on every expectation. Like right here, they beat on revenue, they beat on EPS, which is net income, and they beat on EBITDA. So they're triple beating on every expectation, but the stock is, of course, trading down. And that's why I think it's worth buying, but not as a huge position. So if we go to the revenue, it's up 10% year over year. Revenue is growing double digits. They're making a lot of net income. They're making 1.6 to 1.8 billion in net income a quarter. And what is Adobe doing with 1.6 to 1.8 billion of net income? Well, they're actually putting it all into share buybacks. I love this. They spent 2 billion, 3 billion, 3 billion. Like they're literally spending all their money on share buybacks. And here's what that does for you. If we go to the net income's up 5%, but net income per share is up 11. So, yeah. All right. So, what's your best dividend stock? Hey, that's a great question. My best performing dividend stock would probably be FIX Comfort Systems in here. We're up 117% on them. They have a dividend, but the dividend is very small. So, probably isn't like the traditional dividend stock you're asking for. But one of my more favorite, if you're looking for like a higher yielding name, two high yielding stocks I just bought was IRM, Iron Mountain. This is a data center REIT where 95% of the S&P 500 are customers. And we're only up 1% on my shares. I just bought 6 more of them. And then I also bought Main Street Capital. They have a 6% dividend yield, and they're actually one of the few stocks that pay monthly. So yeah, if you're looking for a monthly dividend, this one pays monthly, which is kind of cool. Hey, what up, Joel? Hope you've been well as well. So Kudo said, can we look into Pony AI Robotaxi? Hey, what up, Mo? Good to see you. Actually, let me look at this one first. AU, and then we'll pull up Pony AI and BTCI. Is that the Bitcoin income ETF? Well, anyway, Anglo Gold. So yeah, honestly, any gold play should be at an all-time high right now. Like you look at the price of gold, it's just at an all-time high right now. So if we go to the revenue, yeah, look at this growth. The sales are up 77%. And out of this 2.4 billion, 800 million of it was after-tax net income. This is insane. So do you get a dividend as well? So you get a 1.5% dividend. It's kind of like you get exposure to gold with a dividend, which is pretty cool. But do note 65% of the revenue comes from Africa, then Australia, then the Americas. So yeah, that's a gold play. And if you just look at the actual commodity of gold, which is ticker symbol IAU, it's legit at an all-time high right now. So they should always rhyme together, those two prices. So yeah. Let's see here. BTCI so yeah, this is the high income Bitcoin ETF. Basically, it just sells calls on Bitcoin. What's the yield that they're saying? A 25% dividend yield. So yeah, that one you buy to maximize your dividend income. I really wouldn't expect them to outperform in the long run, to be honest with you. So let's pull up Pony right here. Pony AI. This is an autonomous robo-taxi stock. Kudo said, let's check it out right here. So yeah, this one has seen a lot of momentum. They were up 19% on Friday. So yo, first off, congrats if you own this company. Let's see, do they have sales though? So revenue was 21 million the most recent quarter. They have a really good balance sheet. Looks like no debt at all. How much cash they got? $608 million of cash and no debt. Look at that. Toyota Motor owns 12% of all the shares, so that's kind of interesting. Maybe backed by Toyota Motor. Still losing net income every quarter, but that's all right because they have a lot of cash on hand. I bet they are. Well, anyway, it looks like a momentum play. The growth. Do we have expectations? We do have some expectations. All right, so they're going to chill at around 40 to 50 mil of revenue a quarter. So anyway, that's Pony. I'd probably be careful with that one just because it's a small cap. Yeah, what was the market cap on that company? Pony AI is only worth, it's 7.4 billion. Actually, they're pretty big. So here's a company I'd actually stay away from. This is HNS, and someone said Rich Tech. Yeah, hey, Rich Tech Robotics, we're not going to, hey, try not to spam there. Yeah, we're not going to cover Rich Tech Robotics. We might, but that one's kind of not too good. But yeah, check out this stock right here, The Honest Company. This is another very small company. Here's why I think this one kind of deserves to be at like this, trend. It's went from $8 to $4, so it's been cut in half. Here's why I think investors have been a little disappointed with their earnings. If we go to the revenue, here's the thing. The revenue is only up by 0.4. That isn't much. That doesn't even beat inflation. So I really would like to see the growth come back to the revenue on The Honest Company. But good news, they are making that income, 3 mil. But that slow growth scares me. Again, they just sell a commodity. They just sell diapers and wipes. But yeah, very small company, but very small numbers. And I wanted to see the growth come back. So let's see. What up, Joel? He said RDW, Redwire. Let's do it. Do you own any cryptocurrency or just stocks? Yeah, what up, JV? Yeah, I actually only own stocks. I don't own any crypto. Yeah, we'll look at SoundHound AI too. I'd actually like that one. What is Veritonio? If you got a stock you want me to look at, let me know with the ticker symbol. By the way, if you want to hit the follow button, we're going to be live again in 8 hours. We're going to be streaming for another 2 hours right now, but then we're doing another stream in 8 hours. So anyway, here's Redwire. By the way, if you want to hit the follow button, I sell nothing. I have no course book. Watch out for people impersonating me, but this is $1 billion company, $1.1 billion market cap. Let's see what they do. So space and defense technology solutions. So that business is actually down by 21% year over year. But check this out right here. Here's what's very fascinating. Check out the analyst expectations. The next 2 quarters should be very volatile as the revenue is supposed to ramp up to over 130, 150 mil. Notice they have been missing every quarter on their expectations. So maybe that's one reason why they gap down on earnings so hard. So we want to make sure they don't miss their expectations again. Yeah, that's just not great. The revenue is only down 21% year over year. So yeah, I'm new here. Is this stock? Yeah, we're just looking at stocks here. If you got a stock you're going to look at, let me know with the ticker symbol and I'll give you a quick analysis for you. Of course, none of this is financial advice. I'm not an expert. I'm just a college student. So what up, Dylan? He said RILY. Let's check it out. So B. Riley Financial, this is a very small one, only it's worth 200 mil. So do beware, it's a very tiny company. I don't really like looking at the tiny market caps, but communications segment, that's down by 20% year over year. That's their biggest segment. That's not great. Wealth management is down by 2. Consumer products down by 14. So that doesn't look great. So yeah, revenue's down. Net income's negative, assets are declining. You judge the bank off their assets if this is a financial bank or something. I would be super, super careful with this stock. To be honest with you, I probably wouldn't even touch it. That looks really risky, just really low market cap. Where can I find the app? Oh yeah, hey, if you want to get I'm on a brokerage right here. It's where you buy stocks. If you want to get this app I'm on, it's in the link tree in my bio, the very first link there. It's a brokerage. But let's see here. Can we look at IMMR? Is that immersion? So I haven't looked at this stock in a long time, actually. They haven't been doing too well. If we scroll on the monthly, wow, they're the same prices they were back in 2001. So you bought the stock, 20 years ago, 25 years ago. Oh, this is, Barnes & Noble's education. So maybe this is Barnes & Noble's? I don't know. Looks like the revenue is just rallied up, but these are like weird. It says they're making net income every quarter. Their assets just jumped up, so they must have like merged with Barnes and Nobles. I'm not sure the whole story here. I wish I could give you more thoughts on this company. It looks like a software application company with a 2% dividend yield. I don't know. They're interesting, but I don't know. Last one for me, Joby Aviation. I subscribed. Oh, hey, yeah. What's the ticker symbol for Joby Aviation? We'll check it out. Have you been happy about SoFi? Yeah, I've been very happy about SoFi. We're at SoFi. We're up like 5x on them now. So someone, Seabass, what's up? He said Nebius Group. So yeah, that's actually a company in the NVIDIA portfolio right here. Let's check it out. So, if this would load here. Come on. So yeah, we go to the portfolio insights and yeah, there we go. So again, just because NVIDIA owns a stock. So NVIDIA has a portfolio, they own CoreWeave, ARM, APLD, and another stock they own is Nebius. They own a chunk of them. And just because NVIDIA owns a stock doesn't mean you should. You should always go do your own analysis on a company. And well, when we do some analysis on Nebius, everything I'm seeing here looks very positive. If we go to the revenue right here, if it would load, man, sorry about my Wi-Fi. It's a little slow right now, but if we go to actually, I just have to reset the app. But look at this growth. The revenue literally went from 14 mil to 105 million year over year. That's a 7x increase. That's insane. So 105 million was a record and the analysts are expecting it to just continue to climb higher. 155 mil next quarter, 260 million the next quarter. So I love how growthy Nebius is. And Nebius just signed a huge deal with Microsoft. Microsoft announced, Nebius and Microsoft went to a huge like GPU infrastructure partnership, which is pretty cool. So yeah. All right. So, yeah. Let's see. Ooh, Rich Tech Robotics. Yeah, fine. Well, here's the thing with Rich Tech Robotics. This isn't really a stock that if you're looking for a real robotics company to just like buy and hold forever because they have great IP, great patents. You're just looking for a pure robotics play. You just want to buy and never sell. I don't think this is one you want to touch. They're only worth $700 million. Like, check this out. It's a small cap. It's a micro cap. It's basically a startup. They do $1 million in revenue a quarter. The revenue's down 20% year over year. They lose net income every quarter. They have no sales. They don't really have any IP or patents. So they have a little partnership with NVIDIA, but it's a revenue-less partnership. I would just be super careful. This is all momentum right now. It works great, in right now's market, with the quantum bubble and everything's rallying up a bunch. But I'd be really careful with that one in particular, especially at this price. There's money to be made. I think that one's a trade stock, not buy and hold. What apps do you? Oh yeah, by the way, this is it's a software where you buy stocks on a brokerage. If you want to get this app I'm on, it's in the link tree in my bio, the very first link there. Hey, what up, females? And someone said Verita. Yeah, give me the ticker symbol and I don't know which stock that is. If you give me a ticker symbol though, I can check it out for you. Oh yeah, Joby. Okay, we wanted to check out Joby. Joby. I believe this is another startup, so beware. I'm probably not going to have any great thoughts on this company. If we go to, here's the thing, look at this market cap right here. It's a $14 billion company. So you're buying a business worth $14 billion. You're buying a business that did 15,000 of revenue in the past 3 months. 55,000, 30,000. And if we go to the net income, they lost 300 million in net income on that. 100 mil. 250 mil. So in my opinion, financially, this one doesn't look great right now. Oh, they are also backed by Toyota Motor. Check that out. Toyota Motor does own 15% of the entire shares, which is pretty cool. What are the analysts expecting? So yeah, look at that. Analysts aren't really expecting the revenue to rally up anytime soon. So I have trouble paying $14 billion, but they're all momentum right now, of course. But from a financial point of view, I just don't love that one. It'd be hard to trust. You're really buying the future story there. You're really trusting the future growth there. So yeah, FTNT, what up? Matsy said Fortinet. I love this company. This is a cybersecurity stock. So if you're looking for exposure to cybersecurity, this is probably one of the better names out there. I love PanW, I love CrowdStrike, and Fortinet. These are probably the best three out there. And I love specifically subscription model companies. Their revenue is so predictable. Check out their security subscription. This revenue is up 15% year over year, after going 22, after going 34, after going 25. It just hits a record every year, every quarter. So I love the subscription model, their security subscription growth. And it's not just the revenue that's going, but also their profits. The after-tax net income is insane. making 400 to 500 million of after-tax net income a quarter. It's growing. So Fortinet's one that I would put on the watch list if you want cybersecurity exposure. I just buy and hold them for the long run. So yeah. After distribution, okay, what's your take on Wolf? So yeah, here's a stock. After this, I'll show you a stock I would buy. But here's a stock, another one I just can't touch. Like, I don't know who's buying this stuff, but it's almost for sure just gonna like go to zero. Like, not financial advice here, but here's what I mean by this. Like, look in the top right. The whole company is worth $348 million. In my opinion, this is the kind of stock that's just going to continue to hit lower and lower all-time lows, just going to continue to go lower. So yeah, I wouldn't touch Wolf Speed. Here's the thing. Remember, the whole company was worth $360 million, and they literally lost $670 million in net income just this quarter. That's 2x their market cap. $300 million the quarter before, 300 mil. Like, they're literally burning through hundreds of millions of dollars, and they're losing all this money all for a business that's not growing. Like, the revenue's down 2% year over year. They have more liabilities than they have assets now. Like, everything in here is headed in the wrong direction. And I honestly think the stock is probably just going to continue to hit lower and lower new all-time lows. So yeah, that's why I always advise, you should always go check out the financials of a company to see, like, do you really want to own a company that's worth 300 mil that loses a couple hundred mil a quarter? Like, it's just tough to trust that, like, really trust your hard-earned money in that kind of stuff. But here's a cool stock. Oh, what platform are you using? Yeah, hey, by the way, if you want to get this up, I'm on this is a brokerage, just where you buy stocks on. It's in the link tree in my bio, the first link there. Here's a really cool company that, you remember, we just looked at Wolf Speed. Their financials were terrible, so they deserve to be at an all-time low. Well, here's a company, IRE and Iris Energy, with good financials that, in my opinion, deserves to be at an all-time high. Like, you look at SoFi, Robinhood, some of these companies with good growing fundamentals, like, they deserve the premium. Check this out right here. If we go to Iris Energy right here, here's why this stock deserves the hype. I certainly wouldn't, buy this one at their current price, but here's kind of why they deserve it. The revenue is so growthy. The revenue went from 56 mil to 186 million, that's a 3x increase year over year, insane. And out of this 180 million of revenue, they made 100 mil in net income. Like, they used to lose some money, used to be choppy, but now, for the past 3 quarters with this insane growth, like, at this growth rate, what's the revenue going to be at the same time next year? So I really like the profits on IREN. They have a good balance sheet as well. So anyway, Iris Energy is pretty cool. I wouldn't touch them at this price, but yeah, that's a data center hosting business kind of. So, hey, Cruz, good to see you, my friend. Happy Sunday. Hope you're having a great day. So, what up? Jose said BP. Is that the oil and gas company? Yeah, so I don't know if this is an American stock, but let's see. Yeah, these oil and gas companies don't really outperform in the long run. Like, if we zoom out to the weekly stock on BP, BP is the same price that it was in 1997. So, again, these oil stocks don't outperform, but you're buying them for the diversification. Like, if there's ever war fears, inflation fears, or whatever, oil usually does good in those environments, and you get great yields with these oil stocks. Typically a 5.6% yield. I have other oil stocks I like more, like low key, I'd rather buy an Exxon or a Chevron than this stock right here, than BP. Let's see how they're doing though. Yeah, most of the revenue comes from outside the US. The revenue's down 1% year over year. That's normal because the whole sector, the price of oil is down. This summer we've seen like abnormally low oil prices this summer. But yeah, they're making like 3 to 4 bill of net income a quarter, or like 2.5 to 3 bill. Yeah, so there's a oil and gas stock again. This kind of, you don't really outperform in the long run, but you get it for the diversification. A big chunk of the S&P 500 is just in oil stocks. So does EOSC have room to grow? Let's check it out. Let's see. SoFi competition. Yeah, SoFi has competition from like Robinhood. So here's EOS Energy, more room to run. Let's see if that's true. So look at this market cap. It's still pretty tiny. So they could have more upside. They're only worth $2.7 billion. And yeah, they're pretty much at their IPO price when they IPO'd in 2020. Let's go check out their financials right here. Let's see what they do. So they have product revenue. Looks like the sales just came back. So check this out. Whoa. The next 2 quarters. This is why the stock has seen so much growth recently. It's kind of pricing this in. In 2 quarters, analysts are expecting 81 million of revenue. So that's insane. It's going to go from 7 to 81 mil. That's an over 10x increase. So really watch out for the next 2 quarters here. There should be a lot of volatility. I did notice they missed on their most recent quarter. So, but wow, look at the growth. I mean, 800K to 15 mil. And then from that 15 mil It's going to go to 81 million. So really watch out the next couple quarters. I wouldn't be shocked to see them continue to climb, but I wouldn't probably have a lot of money in that one at this price. Hey, what up, Isaiah? You said what app is this? Yeah, hey, if you want to get this app I'm on, it's again, it's where you buy stocks and stuff. It's in the link tree in my bio, the very first link there. So I'm heavy in Rolls Royce. What's your opinion on my gains? Yeah, the gains on Rolls Royce. That's RYCEY. Yeah, they're an ADR, so you do pay like a yearly fee because they're not an American company. But yeah, a lot of people know Rolls Royce for like the cars, but this is not a car company. Rolls Royce is really an aerospace and defense company. Check this out right here. This is what's insane. Legit 47% of all the revenue just comes from their aerospace business. And then they also are in the defense sector. So legit 75% of the revenue is just aerospace and defense, which is pretty cool. And that's a sector that's booming right now. And check out the profits. This is insane. You know, they report in halves because they're European, I believe. So that's why it says H1. But for the first half of 2025, the net income is up insane through 4x year over year to $6 billion of after-tax net income. They now have more assets than liabilities when they used to always have more liabilities than assets. So anyway, Rolls-Royce is killing it. I mean, they have a 0.5% dividend yield. Rolls-Royce is a beast. I don't know if I'd buy them here, but yeah, nice aerospace and defense company. They make jet plane engines. Let's see. All right. So, what up, NASCAR? He says, did you see ZOOZ move Friday? Hopefully, this is a yes. We don't really cover these kind of. Hey, Luke Williams. No way. I didn't even see that. Luke Williams, dude. Thanks so much for that little hat and that gift there. Yes, sir. We will check out you after this. Yes, sir. I know that's a big uranium play. Yeah, so we're not really going to cover Zoo's power right here again. If you look in the top right, they're only worth $34 million. You know, the stock's pretty much at an all-time low. Do they have sales even? So yeah, I just don't see the value in this stock really. It's a startup. It's a revenue-less company now with more liabilities than assets, losing money every quarter. That you want to swing trade that or something. So yeah, hey, no way, dude. Bible and stocks, dude. I really do appreciate all the gifts there, dude. The two dinosaurs. If you got a stock you're gonna look at, let me know their Bible. I got you. Hope you're having a great Sunday. So here's you. By the way, we stream every Sunday at this exact same time. We're also going to be doing another live stream later tonight at 8 p.m. So we're doing 2.5 hour live streams today. So and by the way, I sell nothing. I have no course book, WhatsApp. Watch out for people impersonating me. Moomoo. Yeah, this is the Moomoo app. If you want to it's a brokerage. If you want to get this brokerage I'm on, it's in the link tree in my Bible or my bio. Yo, the link tree in my bio, the first link there. So yeah, anyway, here's you. This is Energy Fuels. It's a uranium play. A lot of the uranium stocks have seen a lot of momentum. So yeah, check this out. 93% of the revenue is just uranium. So yeah, pretty interesting. And right now, we're really trying to source our uranium from Canada, really less away from Russia. We used to source a lot of our uranium from Russia, and now we're not doing that anymore. My favorite uranium, if we go to the URA ETF, the uranium ETF, it almost looks very similar to that stock. I mean, look at this ETF right here. Basically, there's been a lot of executive orders stimulating nuclear reactors, and nuclear reactors are, of course, powered by that yellow cake uranium. But my favorite uranium play, if I had to pick one, would be CCO Cameco. My opinion, the number one very best uranium play out there. UU is good too. What app is this? Yeah, hey, again, if you want to get this app I'm on, it's in the link tree in my bio, the first link there. It's a brokerage. You buy stocks on here. So let's see here. Ooh, IONQ. Yeah, no problem, Bible. Let's do it. IONQ. So this is actually a quantum stock, I believe. And you know who took a stake into this company is Amazon. Amazon bought 40 million of the stock, like down here, and it's worth like over like 100 million now. Yeah, again, that's barely anything for Amazon's market cap, but still cool. Anyway, this company, IONQ, I believe just acquired a business. So if we go to the weekly news here, IONQ completes $1 billion Oxford Ionics acquisition. So I actually love that they're doing acquisitions because they did it with stock too. That's genius of them. They know the stock's insanely overvalued right now. So they've been issuing stock and they're buying a business with it now to create real value. So I do think this one is probably tremendously overvalued. $21 billion market cap. A lot of the quantum stocks are pretty junk. Qubits, RGTI, no real fundamentals. It's all momentum right now. Like extremely. Like I can't imagine like this going much higher. The risk reward looks not great on these. So yeah, there's money to be made, but I wouldn't just buy and hold those as shares for the long run. If you want exposure to quantum, I'd go with a Google, a Honeywell, an IBM. You know, they're not obviously a pure play for quantum, but they have the money and the talent to be the industry leader. So can we look at NextEra Energy? Oh, Symbiotic. Actually, if you're looking for a robotics play, here's a great one. Yeah, then we'll pull up NextEra Energy, Alibaba. We'll look at all these. So here's Symbiotic. This is a warehouse robotics company. Actually, my second favorite robotics play out there. So their main customer is actually Walmart. Walmart also took a stake into the company. So they have a 13.5% stake into this stock right here. And they actually have real IP, real patents. They have over 1,500 registered patents. And the revenue, they have real revenue compared to like a Serve Robotics or a Rich Tech Robotics. Like, this is your good real robotics play. The revenue's up 25% after growing 50, after growing 70, after growing 166. Like, the growth is ridiculous. They're super close to net income positivity. Like, they're barely losing any money anymore for the market cap. They're beating crazy on analyst expectations. Like, look, the orange line's what the analysts expect. Huge beat. So Symbiotic, while the valuation might be a little high, I like them as a robotics play. Favorite robotics play is Amazon, but obviously not a pure play. What software are you using? Yeah, hey, by the way, if you want to get this app I'm on, this is a broker. It's where you buy stocks on. It's in the link tree in my bio, the very first link there, if you want to get this app I'm on. I should put like a pinned comment or something. Okay, so NextEra Energy, NEE. This is a utility company, one of the best ones out there. They're actually the largest utility in the world. They own Florida Power and Light. So if you live in Florida, most likely your utility bill is through them. Literally, this revenue just comes from the state of Florida. They're doing 3 to 4 billion of revenue a quarter just from Florida. And check out the net income, or really look at the operating profit. They're basically making over $1.5 billion of net income every quarter, and you get a very sustainable 3% yield. So if you're looking for a decently yielding stock, this one has a sustainable 3% dividend yield. They're a regulated utility. I really like the regulated utilities, ticker symbol VPU, because even if they don't receive that money from customers, the government gives them that money. They guarantee them that money. But on the offhand side, if they can't collect major upside and overcharging like a unregulated one could, like a CEG, Constellation Energy, is the unregulated utility. So anyway, I like the VPU ETF. Literally, these utilities literally just return 6 to 7% a year, always. The largest holding in here is NextEra Energy. Then it's Constellation Energy. My favorite utility, I do own them, or my second largest holding. Southern Company, they own Georgia Power and Light, phenomenal one. Duke Energy, Vistra Energy, second best nuclear stock. Anyway, those are the utilities. I think they're worth having exposure to. VPU is a great ETF for that. So let's look at BABA right here. Ooh, someone said UiPath. Hey, that's my biggest loser. You know what? I'll pull this one up a little later. I love being fully transparent on here, but yeah, we are down 43% on UiPath. Remind me to look at them. So anyway, here's Alibaba right here. This is an ADR, and one reason hey, Harry, dude, I appreciate you, Harry, for the roses there. If you got a stock you want me to look at, let me know, my friend. But yeah, check this out right here. Alibaba, one reason they rallied up so tremendously is because they announced that they're going to be making their own chips, like literally NVIDIA-type chips, to fill the gap, because NVIDIA can no longer send their chips to China, and Alibaba said they're going to start making their own chips, which is pretty crazy. That's the reason they rallied up so much, despite them missing on every metric. They had a little... Their GAAP actual diluted EPS was missed on expectations. So anyway, I still like them. They're a super profitable company. I do like them, actually. They're making this is in USD, by the way. We've converted the currency, so they're making legit. Hey, watch out! Oh, hold on here. Watch out for those scammers. Hold on, let me block account. Okay. Yeah, by the way, I sell nothing. I have no course book. Watch out for people impersonating me. I'll never follow you, DM you. Okay. Let's keep going here. So, oh my goodness. Okay. Alibaba's legit making actually, if you average it out here, like 4 to 5 billion of after-tax net income a quarter. They traded a low multiple, compared to an Amazon, of course. They're an e-commerce like Amazon. They own AliExpress, but they're really more business to business than business to consumer, like an Amazon is. We can go to their active customers right here. They got 903 million annual active customers. Their monetization rate is pretty good. So anyway, yeah, that's AliExpress, basically Chinese Amazon getting into chips now. Pretty interesting. So, Coinbase. You know who owns Coinbase? is actually Kathy Wood. So if we go to the Kathy Wood portfolio right here, actually a lot of people don't really respect her anymore. Her ETFs have not done too well compared to the S&P 500. They've done tremendously bad actually, but this is Coinbase right here. This stock is like a crypto brokerage, crypto exchange kind of thing. We've all probably heard of Coinbase. They kind of just trade with Bitcoin. They're like a Bitcoin proxy. Usually whenever Bitcoin's doing good, Coinbase will do good. So we do get one metric. Sorry. So we do have one metric right here. I brushed my teeth right before this and like the mint is like in my throat. It hurts. Okay, so the active users is pretty cool here. This is the one metric I really like. This is their monthly transacting users. So not just monthly users, but monthly transacting users are 8.7 million, up from 8.2 million the previous year. So a lot of people are more active on Coinbase than the previous year, which is pretty good. I think one reason why the stock did gap down on earnings initially is because investors were a little disappointed with the growth. I mean, this is Coinbase right here. And the revenue only grew 3% year over year. So, barely beats inflation. 3% revenue growth, not great. Look at that. They missed on the revenue expectations for a high PE growth company. We don't want to miss on their growth. So, anyway, I'd probably rather just own Bitcoin than Coinbase. But anyway, pretty cool. Yeah, SoFi is another competitor to them, kind of. Imagine if you could consistently make, hey, if it was consistent enough NASCAR, I'd definitely do it. So Joel said ATRO stock. So this is Astronics. Wow, the stock's actually done pretty good right here. So what is SESAI? Yo, if you got a stock you're gonna look at, let me know the ticker symbol. Because I don't know some of these stocks. But yeah, this is Astronics right here. They're a $1.5 billion company, and they've done pretty well the past couple weeks here. Check that out. Nice little momentum on them. Let's see what they do. So they're an aerospace company. That's a booming industry right now, and it's up nicely. The revenue's up 9% after going 10, after going 44. So the revenue's growing quite nicely. Are they profitable though? Let's see. So revenue and net income. So yeah, they're struggling with net income positivity. It looks a little choppy here, but I do like the growth of the business. Well, actually, it says the revenue is only up 3.3. So what are the test systems revenue? Oh wow, I don't know what this declined very badly. It fell 50% year over year. That actually is why the main business grew by 10, but the total combined revenue is only up 3. So I would want to see some more growth come back to the business and some more consistent net income, but not a bad, I got to look more into their assets, but looks like a smaller aerospace and defense play. So yeah. I saw this Chipotle stock. You know what? Let's do Chipotle stock. So this is like a restaurant. They're like a healthy restaurant, and they have a high PE. And to be honest with you, I think this one could go lower. Here's why, and I'll just show you the numbers for yourself. You can draw your own conclusion. So let me show you their multiple first off. The PE, which is price to net income. Chipotle trades at 35 times net incomes. And we compare that to industry average, that's a 27. McDonald's trades at 25. So they're trading at an industry high multiple. And it's okay to have a high multiple as long as you're high growth. But here's why the stock gapped down. They're missing on their growth expectations. The orange line's what the analysts expect. They're missing. They missed on revenue. So if we go to their revenue year over year, it's only up 3%. That's unfortunate. They just that really doesn't even beat inflation. The revenue's up 3 and the net income is actually down by 4. So what does that mean in English? Basically, they're losing margins. Net margins is down 8% year over year. So that's why I think the stock has been struggling. It's a high PE, high growth company that kind of just lost its growth a bit. Margins are coming down. It's not exactly their fault. They just got a new CEO. So and anyway, I think this one could go a little lower, but I'd put them on the watch list. I actually just bought it literally on last Friday, I bought a share of McDonald's. I think McDonald's is a steal of a deal right here. Hey, Harry. Yo, Harry, thanks for the roses, dude. I do appreciate that. Yeah, he said, can we please do Fubo TV? Yeah. So unfortunately, I wish I could give you more thoughts on this company, but I really think the upside potential is capped here. Like you could juice another bit, but I've looked into this. Disney, the money's already there. Disney owns 80% of the voting rights. Disney controls this company. And I think the max price this can really go back up to is this $5.50 level. So you could juice another, 20 25%, but I really think beyond that, the upside isn't much. So I'd be careful with this one. And honestly, if they didn't get this Disney deal right here, I think the stock would be in some trouble. Here's why. They actually just lost their growth. The revenue is down 3% year over year. They actually lost a little bit of subscribers. So I I wish that's probably not what you wanted to hear, but I don't love Fubo TV. My side of the bet is actually just Disney. I own Disney shares. I got 15 shares of Disney. So that's my side of the bet. And someone said, you forgot UiPath. Yeah, hey, let's cover UiPath right here. This is one of my biggest losers. We are down 50% on them. And dude, no way. Hey, shout out to Maddie on the YouTube stream. He donated, I don't know what currency that is, but he donated like $5. Dude, I really appreciate you, Maddie, on the YouTube stream. Yo, best way to support me is just watch me from the YouTube stream. So thanks again, Maddie. I hope you're having a great Sunday, my friend. So if you got another stock for me you want me to look at, let me know too. So here's UiPath. Let me tell you why I wouldn't buy this company. You know, I do own them, but here's why I'm not selling them. So I do own shares. I wouldn't buy them here, but I'm also, it's too cheap for me to sell. Here's the thing. They literally have $1.5 billion of cash and no debt. So think about that. $1.5 billion of cash. The whole company is worth $6.3 billion and they have no debt. So a good chunk of their market cap is just their cash on hand. And the revenue's growing decently. Like revenue's up 15. It's better than these single digit growth rates. So revenue's up 15. They're struggling with net income positivity. So they're just barely getting net income positive, just scraping by a little bit of profits. They're doing some share buybacks, which is cool. How much did they buy back? I don't know. But anyway, actually, we could just see if you go to the cash flow statement and you go down here to the net common stock issuance, as you can see, there's been 100 million on buybacks this quarter, 220 million on buybacks. So it's definitely better than them diluting you and issuing shares. So anyway, I wouldn't touch them. I'm honestly looking to get out of them. Yeah. But yeah, I'm my biggest loser. By the way, here's my all-time performance in here. We are up 17% all-time in here. So, yeah, we haven't really outperformed the market. And thanks again, Maddie, for the roast there. So, yeah. Rocky Lab. Aaron, what's up, dude? Yeah, let's do Rocky Lab. And hey, Tingrico, hope you're having a great Sunday. Yeah, remind me to look at WBT. And let's look at what's this one? Rocket Lab. So if you're looking for a space company, a space stock, and hey, Shrek, yo, Shrek, dude, I do appreciate the 2 roses there. And Dave, man, thanks for the rose, man. If you got a stock you can look at, let me know there, Shrek, for the chili peppers. So anyway, here's Rocket Lab right here. It's a space stock, and honestly, I think they deserve to be at this high premium. They deserve to have this rally that they've had. I probably wouldn't touch this one over $40 with a significant amount of money, but check this out right here. They're beating on expectations. You know, the orange lines what the analysts expect. They're beating on revenue. We go to their space systems business right here. The space systems revenue is up 27% year over year after going 94, after going 9. So it just hits a record every year, every quarter. So the space systems revenue is growing. And also the other half of their business, their launch services, is also at a record. It's up 58% year over year. It's never been over 45 mil before. So record sales in the launch services and space systems, beating on expectations. So that's the recipe for getting a stock that does really good. Do beware, they are still losing a bit of money, but that's all right now. They just completed their Geost acquisition, so expect even more growth after this. So anyway, that's Rocket Lab. I do like them, but I wouldn't touch them at current valuation. I got Rocket Lab when it was under $7. Yo, Melan, you got in at a great, or Melinted, you got in at a great price. And that you deserve it too for not selling out of your position. You deserve all the gains. You know, a lot of people, and this is a mistake I commonly make when I'm up like 3 to 4x on a stock, sometimes I'll sell most of my position. Hey, thanks, Belly. I appreciate that. So Dave, man, thanks for the bunch of roses there, dude. Did he have a stock? I think I saw one, he said. I don't know. Or Shrek. Did they say a stock? I don't know. Shrek or Dave, if you got a stock you can look at, let me know. Someone said, Tempest AI. Let's do Tempest AI right here. So this is a stock owned by Nancy Pelosi and her husband. So honestly, this is one that does have good financials. So check this out right here. If we go to the genomics business, it is booming. It is up 115% year over year. Like, this growth is why I like this company. The revenue's at a new record this quarter. So, Kronos, or hey, what's the ticker symbol for Kronos? What app is this? Yeah, hey, by the way, I'm on a brokerage right here. If you want to get this app I'm on, it's in the link tree in my bio, the first link there. Is it worth getting into Rocket Lab right now? Not at this price. I don't think so. Not over $40 with like a significant amount of money. I don't think. No. So check this out. Yeah, this is why I think Tempest AI like really deserves to be pretty much at all-time highs right now. Like the growth is insane. Revenue's up 90% year over year. They're getting close to net income positivity. Like they're losing less and less money. So mainly, Tempest AI is a growth stock, very growthy. And it kind of got some Nancy Pelosi ownership there too. So where was it here? Let me type this in. KRONOS. Kronos. Let me know. Is it ticker symbol KRO? Is this the stock you're talking about, or is it KNOS? It's probably Kronos Worldwide, a $600 million company at all-time lows. Unfortunately, that's not great. Taiwan Semi. Yeah, let's cover this stock right here. And hey, what up, Jen Chajan? Happy Sunday. Can we check CPRT? Yeah, I do own that stock. Or no, actually, I think I own CPRX. Wait, never mind. So here's Taiwan Semiconductor. If you're looking for a like cheaper semi play, this is one of my favorite ones. No way. Yo, there's no way. Tengrika with the baseball. Yo, Tengrika, if you got a stock you want me to look at, let me know. I'm so sorry. I think you had one earlier, but I really do appreciate that. Really big gift there. Thank you so much. So here's Taiwan Semiconductor. Here's why I think this stock deserves, to maybe be a little higher. They have seen some, with NVIDIA taking a stake into Intel. NVIDIA is moving some of their manufacturing to Intel in the US. If you didn't know, NVIDIA just designs the chips. Taiwan Semiconductor, TSM right here, actually manufactures NVIDIA's chips for them in Taiwan. And they trade at 28 times net income. That's pretty fair for the industry. And I think it's very fair for the growth that they have. They have the largest market share for these 3 nanometer wafer chips. The market share went from 61 to 67% year over year. And check out the growth. This is why I love this stock. The revenue is up 55% year over year. The revenue is up 55 and the net income is up 80. This is insane. This is in USD as well. They're making 11 to 13 billion of after-tax net income a quarter, and you get an over 1% dividend. So it's like you get exposure to NVIDIA with the higher yield, same growth. I mean, it's insane. So let's check out WBTN. Thanks again, Tengrika. If you got another stock you want to look at, let me know too. Oh, this is Webtoon. You know who actually just took a stake into this company is Disney. So Disney, it won't show the news here because it's so tiny. But anyway, Disney owns about 2% or a little over that 2% of this entire company. Not much, but yeah. Basically, the one reason the stock is gapped up so much is because they... recent 76 million revenue guidance. Yeah, basically Disney Webtoon expand partnership with digital comics. Pretty cool. So it's like a toy company or something. Half the revenue comes from Japan, 38% comes from Korea, and only 13% the rest of the world, maybe the US. But yeah, basically the growth should hopefully come back because the revenue is only up 8. They're struggling with net income positivity, but basically there was some really good news after their updated guidance on this day. Like, here's the thing. They had updated guidance on this day, and then on this day, they had the Disney partnership. So they're pretty interesting. I don't know if I'd buy them here, but there's a lot of good sentiment around that name right now. So can we check CPRT? Yes, sir. Let's do it. So this is Copart. I haven't heard of them before, and unfortunately, the stock had a major gap down from like last month right there. Yeah, it was $64, and now it's 45. So let's see what they reported. They must have had a miss. So yeah, they missed on revenue, they beat on net income, and they beat on EBITDA. So they must have had bad guidance or something. They did miss on revenue. Yeah, like look at that. Revenue's up 5.2, but they're making a consistent amount of profits, 300 to 400 mil of after-tax net income a quarter. Oh, this is an insanely good balance sheet. Check this out. If we go to their cash, they have $4.8 billion of cash, record amount of cash, and no debt whatsoever. What's the market cap on them? $44 billion company. Over 10% of the market cap is just cash, making a couple hundred mil a quarter. Like, actually, I really like the financials on that one. What was the stock you were speaking about 2 minutes ago? Oh, I know. Ooh, I think it was Webtoon, or maybe it was Taiwan Semi, TSM. By the way, if you've missed anything, the number one way to support me is just watch the stream from YouTube. I'm streaming on YouTube as well. My YouTube channel is called Nathan Robert. It's also in the link tree in my bio, but you can just type in YouTube Nathan Robert. I'm streaming on there, and if you missed anything, you can replay it, rewind it, stuff like that. Achieve Life Sciences. Can you check it out? Yo, what up, TYX? If you give me the ticker symbol, I can check out Achieve Life Sciences there, TYX. Yeah. So let's look at ARKK. Oh, can you check DLO? Yeah, I forgot to look at that one, B Mills. That's my bad. And then we'll look at ARKK. What up, Eli? Yeah, that's the Kathy Wood ETF. So D Local, they're a $4.4 billion company. What do they do? Because I actually forgot. Um, hey, thanks, Tim. I appreciate that. Hey, again, none of this is financial advice. I'm not an expert, just a college student. But check this out. Do know where this company's revenue comes from. Notice it comes from countries like Brazil, Mexico, Egypt, Argentina, Chile. So notice the US, Canada isn't on here. And they're a transaction revenue company. So maybe like border revenue transaction kind of company. And they're making good money, 30 to 50 mil in net income a quarter. The revenue is up 49% year over year. That's insane. But the net income actually fell. So that means their margins collapsed. That's very odd. Net margin went from 27 to 16. Anyway, the growth is insane on that company. Looks like some border transaction company. What's this app you're using? Yeah, hey, if you want to get this app I'm on, it's in the link tree in my bio, the first link there. This is a brokerage. It's where you buy stocks on. AutoZone, please. And then we'll look at ARKK. Yeah, AutoZone. I love this company for the share buybacks. I mean, even in a recession, people always got to go to AutoZone, get your oil changed, car tire fixed, whatever. Hey, UCE, thanks for the rose there. I do appreciate that. AutoZone, basically this company just does they just deploy all their money to share buybacks. So they're making 600 to 800 million in net income a quarter. What is AutoZone doing with all that? Because AutoZone doesn't pay a dividend. Well, they legit spend all their money on share buybacks. Like it is like for eternity. This is just what they've always done. Like 2021, they spent nearly 4 billion. What's the market cap right now? The whole company is worth 69 billion. Like they're spending like 2 to 3 billion a year on buybacks. If that was a dividend, if they spent that all on dividends and not share buybacks, you get like a 3 to 5% dividend yield. But that's what I love about them. They do share buybacks. That's why the stock never goes down for such a boring business. So, okay. What was the stock? Oh, yeah. ARKK. This is the Kathy Wood ETF right here. And to be honest with you, it hasn't done great. So let's see. ARKK. So look at this. Yeah, they're down bad still from 2021. The S&P 500 is well at a new all-time high since 2021, and this one isn't, but they have been rallying up the past couple, months here. And here it's top holdings, Tesla's most of its portfolio. Then it has Roku, Coinbase, Roblox, then Tempest AI, CRISPR Therapeutics, gene splitting company, Shopify. I love Shopify. I love Robinhood. I love Palantir. And she bought Bitmine Intermersion, so she bought some Ethereum. Interesting. So let's see. Iron Mountain stock. I actually just bought 10 shares of this company right here. Here, I'll show you that real quick. I actually bought this stock in my Roth IRA. So if I head over here to my Roth IRA, my largest holding in here is actually IRM, Iron Mountain. I have $1,000 of this stock in here, and this is actually a REIT, a real estate investment trust. So that's why they have a pretty high yield. You get a 3% dividend yield. It's actually like a 3.2% dividend yield, and it's completely safe. The payout ratio is only a 62%, so they actually have room to raise the dividend. This is a data center REIT. 95% of the S&P 500 are customers. So yeah, we can see like their global data center business right here is growing insane. It's up 24 after growing 30. So for a REIT, this is insane. We can go to their corporate and other business. That's up 51% year over year. So anyway, Iron Mountain's just like one of the more growthier REITs that I really like. Let's see. What up, Bill? He said TTEK is a good stock. Let me see. Let's check it out. So a $9.5 billion company, pretty fair, pretty good market cap. Let's see why the stock fell so much. So commercial and international group. What about on an annual basis? So it actually is growing nice on an annual basis. Government revenue also is growing. Let me see. Are they profitable? So the revenue is only up 1.9%. I think that might be what investors are a little disappointed about. The revenue is only up 1.9, but the profits were up 27, so they were able to expand their margins. So they're making easily over 100 mil in net income a quarter, beating on analysts' expectations. But yeah, I would want to see more growth to the revenue. The revenue is only up 1.9. Maybe they gave bad guidance for that back here. And so that probably explains why the stock is doing too good. But overall, I like the growth. They were expanding margins. Can you check out ACHV? Oh yeah, that was ACHV. What is this one? Achieve Life. Okay, so what app is this? Yeah, hey, this is a brokerage. If you want to get this app, I'm on. It's in the link tree in my bio, the very first link there. So $144 million market cap, and the stock's at an all-time low. We don't really cover these kind of stocks. With all the reverse splits, this used to be a $150,000 stock. Let me see. Are they still a revenue-less company? So yeah, they're still a startup. If we go to the revenue right here, it says zero because they've never sold anything. So they don't sell a product or a service, so they're revenue-less. How much money are they losing a quarter? They're losing 10 mil plus a quarter. That sucks when you're only worth 144 mil. They're losing like 20 to 30% of the entire market cap a year, all for a revenue-less company. So I'd be very careful with that one. I just don't sell anything right now. But I guess maybe when they get FDA approval or something, maybe the stock will rally up. But I don't know. AMSC, that's American Superconductor. Yeah, so this one's been really growthy recently. Wait, AMSC, there we go. American Superconductor, Superconductor. So yeah, check out the momentum on this stock recently. It has been insane, and I think it's deserved as well because the growth is back on this stock right here. If we go to the revenue they're reporting versus expectations, it's insane. The beats over here, they beat on this is insane beat. They beat on revenue by a good chunk. They beat on net income. They're beating on EBITDA. Like, that's insane, the beats that they're having. So that's why the stock is at all-time highs, because they're really beating on what the analysts expect, and they're super growthy. Revenue is up 80% after going 34. They're making net income every quarter now. They're beefing up their balance sheet, which is great news. So yeah, I really like American Superconductor. Oh, AutoZone. Yo, hey, Tagreek, we covered AutoZone the very first time you said it. We just covered it. So if you have another stock you want me to look at, let me know. Thanks again for that gift there, Tagreek. I do appreciate that. So Sam said NVO, Novo Nordisk. Oh, yeah. Then we'll look at, hey, Malik, what is the ticker symbol for Veritone? Is it like VERI or something? We'll try and find it. Say, hey, Wexenball, what up, dude? Hey, thanks for the rose there, Wexenball. If you got a stock you want to look at, let me know. Oh, SoundHound AI. We got to look at SoundHound AI, Eli Lilly. I want to get to all these stocks here, so I'll try and be quick here with each stock. I try and go quick. So here's Novo Nordisk. This is the weight loss company. They sell Ozempic. So if you've heard of Ozempic before, Elon Musk is on Ozempic. You heard of Wegovy. This is the company that owns it. They're a pure weight loss play. 93% of their revenue. So basically the whole business is just their obesity care products. And it's booming right now. They're making easily over $4 billion of after-tax net income a quarter. The dividend is so nice. You get a 3% dividend yield on Novo Nordisk. So the one reason they're trading at such a low industry multiple, like they're trading at 15 times PE, industry average is 22, is because they actually lose their exclusivity for Ozempic in a couple years, like 2 years. Anyone can kind of just sell Ozempic at that point. And they've also seen some increased competition from Eli Lilly. I like Eli Lilly a lot. Hey, Sam, thanks for the roses there, my friend. He said, I bought some Grab calls up 100%. Yo, Grab I love that stock. They're like backed by Uber. They're like the international version of Uber. Pretty cool. So VERI, this is Veritone. Oops. VERI. So Veritone stock. Wow, they were up 30% on Friday. Friday was a huge momentum day. Okay, so yeah, very small market cap. They're only worth $360 million. So do beware, like that's just an extremely small market cap. They're the same prices they were back in 2018. So do beware, but they were up a crazy bit on Friday. I wonder, was there any specific news? 25 mil public offering. I don't know if there was any like specific news. Do they have sales? So yeah, the sales aren't growing. The revenue's down year over year after falling 13, after falling 18. So they kind of have lost the growth. They're losing 20 mil of net income a quarter. The balance sheet doesn't look great. This might just be a momentum play right now. Like looking at the financials, nothing's really blowing me away there. I would be careful with that stock right there. So, all right. There was another stock I wanted to look at here. What was it? Oh yeah, Eli Lilly. Let's go ahead and do Eli Lilly. Oh, when someone says Sprouts Farmers Market, this is tanking. Yeah, dude, Sprouts Farmers Market. I do own them, by the way. In my account over here. Yeah, we are down 12% on Sprouts Farmers Market. They're a healthy grocery store I really like. What I love about Grab is it's more than just a drive company. They got ad revenue and fintech revenue. Oh, that's really cool, Sam. That's really cool. Should we check them out? So here's Eli Lilly stock. This is your Novo Nordisk competitor. And here's Here's why Eli Lilly honestly deserves to be worth like 800 billion. Like they are a monster of a company, and here's why they deserve it. Like they sell a bunch of different prescriptions right here, like Zepbound. That's their like Zepbound. This is the competitor to Ozempic. They just created this weight loss GLP-1 prescription literally in 2023. The sales were 175 mil. Now it's 2.3 billion. Like they can literally just create these products out of nowhere, and the revenue explodes higher. As well as their main product, Mounjaro, for example. If you scroll back, they literally created this product out of nowhere in 2022. The sales the first quarter were 16 mil. And check out then how it just hits a new record every year, every quarter, 3.8 billion. These year-over-year growth rates in the middle are insane. So Eli Lilly is just a super growth company with super profits. What's this app called? Oh, yeah. What up, Vizal? I'm on a brokerage right here. It's where you buy stocks on. If you want to get this app I'm on, it's in the link tree in my bio, the very first link there. Wexon said, you should allow people to share their portfolios and share your thoughts and input. Hey, yeah, that'd actually be a cool idea. I don't know if people would watch that, but if people watch it, I'd do that. You Are Cool said FedEx stock. What's up, man? So FedEx, and then we can look at Carlos, he said Bitmine intermersion. Yeah, that's basically an Ethereum proxy. Oh, we can look at Zeta Global too after this. And Lulu, what's up? We'll look at Amazon. I love Amazon. I do own them. So yeah, FedEx honestly is just being kind of out innovated right now. It's kind of just a boring company. Their package stats. What's your average daily parcel volume? It did decline year over year. But prices did go up a little bit, so they were able to keep their margins, which is good. But yeah, the revenue, it's up 3% year over year. Then they're making good profits. I actually like FedEx way more than UPS, but I like Amazon more than both of those names. So if we go to the yield, it's a nice, safe yield of 2.5% dividend, only a 33% payout ratio. They trade at 13 times net income. They're very consistent profits, pretty much making 800 million to $1 billion of net income a quarter, but slow growth. Sales only up 3%. But yeah, way better than a UPS. But let's look at Amazon right here. So Amazon is a stock. I do own right here. I got 13 shares of Amazon. And whenever I buy a stock, you can see where I, buy my shares at. So Amazon is just a stock you never want to sell. Even if you're up a good chunk on them, just never sell your shares. Let me see, will this work right here? So yeah, a lot of people know Amazon for their online stores, check this out. 40% of the revenue comes from their online stores. What's your YouTube channel? Yeah, hey, my YouTube channel is called Nathan Robert. That's the number one way to support me, by the way. My YouTube channel is in the link tree in my bio, but you can just type into YouTube Nathan Robert. I'm also streaming on there. That's the number one way to support me. I'm trying to build out my YouTube channel. So I'm streaming on there as well. If you miss anything, you can replay it. But here's Amazon. A lot of people know them for their online stores, but really the most valuable part of their business is actually their AWS, Amazon Web Services. 2025 Q2, it was 30 billion, up 17% year over year, after going 17, after going 20. Like this business is literally insane. It's over 100 billion of annual sales for them. They're the number one cloud service provider. Insane growth on the AWS business, and not just that business as well. Their advertising services. They own Prime Video. They own Twitch. So they're collecting ad revenue, the subscription services, so the Prime subscription, all the what's that called? The Twitch subscriptions, and the physical stores. They own 365 Whole Foods. So anyway, they're just a really growthy company. Check this out right here. The revenue is up 13% year over year, but the revenue is up 13, but the net income is up 35% year over year. Insane net income or net margin expansion on this company. What used to be a tough buy, negative margin business, low single digit margin, but now it's over 10% margins. Pretty insane for Amazon. So hey, thanks again, Shrek, for the follow. Appreciate that. So yeah. Carlos said BMNR. I believe, yeah. So this is just an Ethereum proxy. So whatever Ethereum does, this just follows it kind of. If we go to where the revenue comes from, it's just the revenue from their self-mining from, I think it's Ethereum or Bitcoin or something. But anyway, yeah, they're basically a crypto proxy. I wish I'd give you more thoughts on them, but they just issue shares and buy Ethereum. Kind of like the Ethereum version of what's that called? MicroStrategy. So, okay, yeah, Zeta. So not Meta, but we got Zeta right here. Let's do it. Oh, we got to look. I want to look at Raytheon. I want to look at CRMD. I want to get to all these stocks here. I'll try and go quick. So here's Zeta Global. This stock is kind of a growthy name. And they're kind of just like beating expectations. Like if you go to the revenue right here, they beat on revenue, they beat on net income, they beat on EBITDA. Like everything's just looking great here. It's like a good company. Revenue's up 35 after going 32. The net income losses improved by 55%, so that means they're expanding margins. So probably this time next year, they should be making net income every quarter, fortifying the balance sheet. The liabilities used to be 63% of the assets. Now it's only 38. So everything financially is heading in the right direction there. So, okay. Um, um, hmm. Thoughts on Intel after their government stake and Nvidia stake. So yeah, Intel, this is a pretty interesting stock. I probably wouldn't touch them at $29 after the huge rally, but yeah, it's actually pretty game changing. Nvidia is now going to move a little bit of their like manufacturing to Intel because right now, if you didn't know, Nvidia designs the chips, and Taiwan Semiconductor in Taiwan manufactures all the chips. And basically, they're 6 feet away from China. We can't really defend them. So that's why we're trying to be more independent and start manufacturing chips back in America. So that's why I really think NVIDIA was forced to take a stake in Intel. It's only $5 billion. You know, they did $60 billion in buybacks. Like they can easily afford that. It's like it's like half a month of net income for them. So it's no big deal at all. But yeah, the future and the sentiment looks pretty good for that one, but I would be careful right there. What are you using? Yeah, hey, by the way, I'm on a brokerage right here where you buy stocks on. Yeah, if you want to get this app, it's in the link tree in my bio, the first link there. It's a brokerage. So let's see. Open Door. Oh, that's a huge momentum play. You know what? A lot of people have been talking about Open Door. So I'll pull it up really quickly. Basically, pure momentum play right now. What does Open Door do? Well, they just flip houses. So they're really interest rate sensitive. And check out what happened. This is why I think the stock is so momentumy right now. Check out what happened in 2022. This is the revenue numbers from 2022. And check out how they were super growthy. Like it was $4 to $5 billion in revenue a quarter. This is what happens in a low interest rate environment to real estate. But check out what happens as rates hiked up. The revenue plummeted, down 69%, down 70, down 62. The revenue plummeted. And, you know, since then, it's kind of been flat. They lose net income every quarter. But basically, this is crazy momentum on the hope. We just got an interest rate cut. So real estate should do better. But I want just all momentum. I'd be super, super careful with that one, right? Hey, Plasma, dude, so good to see you. Hope you're having a great Sunday. So let's see. Will, what's up, dude? He said AR stock. Hopefully you're having a great Sunday. Is Nvidia Semiconductor a good buy? I don't think so. What up, Vin? He said, I love bacon. Hey, what's up, Vin? Me too. So here's, oh, hey, Tingrika, I forgot to look at AutoZone. Do you want me to look at AutoZone? We did look at it already. Do you still want me to look at it? I'll check it out. So here's AR. This is Antero Resources. I believe they're like a midstream company. Exploration and production. So they're an oil and gas company. All the revenue comes from the U.S. How the revenue should be down a bit year over year. Well, actually, it's up like crazy. Whoa. The revenue's up 33. They're finally net income positive. Yeah, that's great news. Making a couple $100 million a quarter versus, you know, very choppy numbers back there. So that's great news. Cash flows booming. Yeah, AR is pretty good. So they're trading at 20 times PE. Industry average is 11. Again, they just sell oil and gas. No dividend yet on that company. Anyway, they might be like a more growthier oil and gas stock. But yeah, oil and gas stocks don't really outperform in the long run. Hey, it's all good. Yeah, hey, don't worry about it. If you got a stock you want to look at, let me know. Buy bacon stocks. Plasma said, I have a few you haven't seen. Take a look at CDE stock. So this is Collier Mining. Yeah. So this company has seen a lot of momentum recently. Check this out right here. So, yeah, that's insane, the momentum on this company. Let's go check out their financials right here and see if it's justified. But yeah, this is a gold company. Yeah. Oh, we'll look at Micron. Yeah, we'll look at Micron after this. Oh, and we can look at CHGG. Is that Chegg? So yeah, basically this is just a gold stock, and here are all the mines that they own. And if we look at the revenue right here, it's booming. Revenue's up 116%, and they made $70 million net income on that. Basically, this stock should just follow whatever gold does, and gold is ticker symbol IAU. And yeah, the gold's at an all-time high right now. You know, if you got any gold chains or gold jewelry or something you don't care about anymore, maybe go hit up the pawn shop and sell it for some cash, because gold's at all-time high, and then you can buy some stocks with it. If you, I don't know. Hey, let's see here. Okay, Micron Technologies, MU, let's do it. So this company, yeah, new all-time high on this stock, and they deserve it as well. They're kind of like a a cheaper Nvidia almost, and they're just as growthy. Like if you go to this PE right here, which is just net income multiple, they're trading at 29 times net income. The industry average is 45, so they're trading at a pretty fair multiple for the industry, and they're just as growthy. Like if you go to their computer networking revenue, it's up 97% year over year to a new record. Pretty good. If you just go to the revenue down here, it's up 31% or 36% after going 81, and they're super profitable now. They're making 1 to 2 bill of after-tax net income a quarter, and at this growth rate, these crazy growth rates, what's it going to be at the same time next year? It's certainly an improvement from when they were losing $1 billion in net income a quarter. It was a tough buy. That's why I think they've really slingshotted up so high. Like they really went from like losing money to making a bunch of money really quickly. So pretty cool. Good balance sheet as well. Think you get a small dividend. Yeah, a small dividend too. Pretty cool. You know what up, Albert? He says, is MCO worth buying? You know who actually owns MCO? Is the homie Warren Buffett. Let's check this out right here. So Warren Buffett, if we go to this portfolio right here, one of the stocks he owns is ticker symbol MCO Moody's. And this is one of the credit rating companies. Hey, Fred, what's up, dude? Thanks for the rose there, Fred. If you got a stock you want me to look at, let me know. So check this out right here. Moody's, it's a credit rating company. Let's see, Moody's Investor Services is down 0.4% year over year, and then their Moody's Analytics is up by 10% year over year. So that's pretty good. If we combine the two businesses, though, the combined revenue is only up 4.4%. So not great growth, mid-single digit growth, but the net income's the real winner here. They're printing, 400 to 500 mil of net income every quarter. And you also get a nice yield, close to 1% dividend yield. They raise it every year. So yeah, that's Moody's. Buffett does own them. Do you hold crypto? I actually do not own any crypto. So how do I find new and upcoming stocks? Oh, that's you go to the IPOs. Yeah. All right, we'll check this one out. What up, Flip? He said CHGG. Let's check it out. So yeah, this is Chegg. The stock, unfortunately, is at like an all-time low right now. So yeah, if we look in the top right, the whole entire company is only worth $178 million. So do beware, it's an extremely small market cap, but they have this subscription service. I do like subscription model companies. Ooh, so honestly, I can now understand why this stock is kind of at an all-time low. So you can kind of just see their subscription revenue is plummeted down 38% year over year after falling 11, after falling 6. So they're just continuing this decline in the revenue. So that's one thing I would be aware of. That probably explains why the stock's at all-time lows, because this revenue growth is, the business is in decline and they're losing money every quarter. So, and the assets are falling every quarter. So I'd be really careful with that one. I wouldn't buy that one. So what up, Rage? Thanks for the rose, dude. I do appreciate that. What broker is this? Yeah. Hey, if you want to get this brokerage I'm on, it's in the link tree in my bio, the very first link there. It's my favorite app. Yeah. It's where you buy stocks on. So, LXFR is another interesting play. This is Luxfer. Haven't heard of this one either. This one hasn't done too well. This stock is the same price that it was in 2013. Yo, what up, Rage? Yeah, we'll look at PRM after this. Yes, sir. Let's do it. So, yeah, let's go look at this one's financials real quick. So they're an Electron. Well, that revenue is up 19% year over year. Their gas cylinders are down 5% year over year. Revenue's up 4%. And they are net income positive. At least that's the good news. They are net income positive every quarter. They're making a couple mil a quarter. The revenue is only up 4%, so we do want to kind of see some more growth to the name. It's a good balance sheet. All right, balance sheet. You get a nice, oh wow, that's a high yield, a 3.8% yield. Can they wait, how are they affording that? Like they legit made 2 mil of net income this quarter. Let me go to the operating profit. Is that, okay, so they're really making like 3 to 4 mil a quarter. How are they paying a dividend? The dividend cost $3.5 million a quarter, so they at very least need to make $3.5 million, and they didn't afford that the most recent quarter. They are the other quarter. So honestly, I don't love that one, that all their profits are really getting eaten up to the dividend. But it's only $3.5 million. If they make over that, then anyway. Good seeing you, Nathan. Is Fiserv bottomed? Oh yeah, we can look at Pfizer. Pony AI. Yeah, those are. We'll pull up Pony AI. So here's Perimeter Solutions. Let's do it. So, wow, this stock has done fantastic. They're pretty much at an all-time high right now. So let's see what they do. They're in fire safety. that's an industry that I will kind of always need. And yeah, for the full year 2024, look at how the revenue literally doubled from 2023. That's insanely good. And then their specialty products business, that's up 47% year over year. That's great news. They're beating on expectations. Revenue's up 27. They are still struggling with net income positivity, but if you kind of average out the 4 quarters here, they are technically making net income every quarter. Um, yeah, I just really like the growth on this name. Sales are up 27 after going 67. So, yes, there's some kind of fire safety. I'll put them on my watch list actually. Maybe if they get to a good valuation, I'll check them out more. Yeah, PRM looks pretty interesting. All right. Chegg rents textbooks. Fewer people going to college equals fewer subscriptions. Oh, T-Dell, thanks for that right there. That was for CHGG stock. That's why the subscription revenue isn't done too well. So here's Pfizer stock, ticker symbol FI. Have they bottomed? Let's see if they have bottomed. That'd be a great thing to see. So yeah, they're a financial company. They're in merchant and financial sales. How's the financials? That's up 7. Merchant is up 9. So the business is actually growing pretty fairly nice. US and Canada is most of the revenue. They slightly missed on the most recent quarter, slightly missed on expectations. They missed by like 1%. I wonder if they gave bad guidance or something. Like, what was the real reason the stock fell so much? It was probably bad future guidance or something. Because the revenue was up 8. Wow, they're making nearly $1 billion in net income a quarter. Good balance sheet too. So honestly, I like them more than dislike them, but there might be something I don't know. Like maybe they gave bad guidance, but honestly, that one looks good. Or they look oversold, I mean. Hey, what up, Mikey? Good to see you, friend. And hey, what up, Craig? So John said AUR stock. This is Aurora Innovation. I believe Uber is a huge shareholder of this stock right here. It was some company, I forget. Oh, yeah, it was Uber. So check this out. Uber owns 17% of the entire company. So, oh yeah, we'll look at SoFi after this. I love SoFi. But yeah, Uber owns 18% of all the shares. They have this monster balance sheet, by the way, no debt at all, and $1.3 billion of cash. But here's the bad news. Here's the thing I'd be very careful with is the fact that this is a startup. If we go to the revenue right here, the revenue is $1 million this quarter, $2 million, $3 million. So they have no revenue and they're losing $200 million in net income a quarter. Luckily they have a good balance sheet, so they can afford to lose $200 million, but they need to really start making some sales soon. I mean, I guess sales are expected to be $2 million, but it's tough to pay $11 billion for a stock that loses $200 million a quarter, dilutes you, has no revenue. But it is backed by Uber. But those financials scare me a little bit. The fact that they lose so much money. So NVIDIA is an AUR partner. Oh, that's pretty cool. I wonder what they do. It's probably some autonomous trucking company, John said. Okay, cool. I wonder when they'll finally have some real revenue. So let me see here. HAV. SoFi now. Hey, thanks again, Shrek, for all the roses, dude. He said SoFi. Let's do SoFi Technologies. I do own this one, by the way. They're one of my best performance stocks of all time. I regret every share I've ever sold. I'm up like 5x on my SoFi shares. But here's why they deserve to be at an all-time high. I'm not selling any more of my shares. I'll probably never sell any more shares unless something dramatic happens. But check out the financial services growth. This is why they deserve the high multiple. Like this business is up 105% after going 80, after going 222. Like the growth is just insane. Hits a record every year, every quarter. Like in 2020, the revenue was 2 mil, 3 mil, 4 mil. Now it's 260 million. So super growthy on their financial services. Also, their main business, their lending revenue is up 30% year over year. So SoFi is just a really growthy company. People are really starting to take them serious. Revenue's up 43. Like, look at this. They did 850 million of revenue. Out of that, 100 million or 97 million was after-tax net income for them. So people are just starting to take SoFi serious. I wouldn't buy them at this price, but yeah. I haven't looked at this stock all day, and I'd love to. You know what? Let's look at Google. Oh, we could look at NEM. NEM's another gold play, I believe. Is that Newmont? Target looks interesting. Target is kind of being target stock. Revenue's negative year over year. Margins are negative. They're being out innovated. They're just in an already low margin business, 3 to 4 net margin business. Target's in some trouble right now, but we'll actually look at them. I really like Target for the dividend, but that's about it. So here's Google right here. Here's a stock that is just a no-brainer, buy and never sell. Make it a small chunk of your portfolio. Not financial advice, of course, but check this out. The revenue's up 13%. So pretty good revenue growth. Revenue's up 13, but net income was up 19%. They're doing 28 to 30 billion of after-tax net income a quarter. Google literally prints money. So what is Google doing with all that money? Well, since they're so big, regulators won't really allow them to buy a company. They just legit spend all this money on share buybacks. They're half of it. They're doing 13 to 15 billion a quarter solely on share buybacks. So that gives you a lot of value. If you look at the net income's down by net income's up by 19, but net income per share is up by 22.2 because the share part of the ratio is down. Plus, you get a small dividend. They're like an ETF in one. Google literally owns YouTube. They own Android. They have the Google Cloud business, which the Google Cloud business is insanely growthy. They own Waymo. They're in quantum chips. They just acquired Wiz, a cybersecurity firm, for $31 billion. Like, Google's just a monster. I love them. So, I gotta go. Eagles game is starting. Have a great stream. Hey, see you later, Plasma. Have a great rest of your Sunday, man. That sounds fun. Francisco said Meta. You know what? We looked at Google. Now we'll check out Meta. Wait for Google dip or buy now. I would honestly, call me crazy, I would buy Google now if you have the intention to just buy and hold them forever. I'd buy Google now, but don't make them a huge position yet. Wait for Google to fall more to really make them a bigger size position. I do own Google, by the way. I might be biased. I own them in my dividend-only portfolio. This is my Roth IRA, but over here I have my dividend-only portfolio, and one of the stocks we own in here is Google. They've been an absolute monster performer. We're up 57% on them. So, but anyway, here's Meta, another stock that I own, another just buy and never sell stock. If you look at the multiple right here, they're trading at 28 times net income. That seems pretty fair for a Mag 7 stock. Meta, they own Instagram, Threads, WhatsApp, and look at this is what's crazy. Their active users, their daily active users are 3.48 billion. So basically half the world is on one of their apps every day. Meta's making, 15 to 20 billion in net income a quarter. Like, this is just a great company. They're doing share buybacks. They're doing a dividend now. The Threads app has the same amount of daily active users as X now. They just announced ads to WhatsApp. Meta just had did anyone see the new Meta Ray-Bans announcement, or like the new Meta Ray-Bans glasses? They look so cool where you can you can scroll on Instagram Reels on it. You can message people, call people. The Meta Ray-Bans new one looks pretty cool. So Fred said UPS is great. FedEx is great. Here's the thing about UPS. What up, QY? Yeah. Oh, what up? We'll look at SFIX after this. Remind me. But yeah, here's the thing with UPS. Here's the thing I'd be careful with. I think this one might have an unsustainable dividend. And again, I just like to show you the numbers for yourself so you can draw your own conclusion. If we go to the dividend right here, they have a 7.8% dividend. That's insane. If this yield was sustainable, you're making 8% of your money back in a qualified dividend every year. That beats the S&P 500 pretty much. But here's the thing. The dividend might not be sustainable. If we look at the most recent quarter of net income, they made 1.28 billion in net income. Remember that number. They made 1.28, but the dividend cost 1.35 billion. So they couldn't afford the dividend this quarter. They couldn't afford the dividend last quarter. And that's kind of the tough part. They just legit couldn't afford the dividend. So yeah, they made 1.28 billion net income, but they didn't retain any of this. I would like them to make a significant chunk more than the cost of the dividend for them to actually retain some of that money. So yeah, that's what kind of scares me. And this is just not really a growing business. The revenue is actually down 2.7% year over year. They're kind of just being out innovated by Amazon, which is unfortunate. So SFIX, what is this one? Oh, what up, Burner? He said, can we look at Netflix? Yeah, remind me to look at Netflix. So this is Stitch Fix, huh? I actually have never heard of this stock before. Let's check it out right here. Hey, what up, George? He said MRVL. Yeah, we got to look at MRVL as well. So this is a $730 million company. So a pretty small market cap. Yeah, dang, look at that. Stock is down bad from 2018. But let's go look at their financials right here. What are they doing? So the revenue is expected to fall off a cliff in 2 quarters. It's supposed to go from 320 to 270. So there's a lot of expected decline in the revenue in the future. So that's not great. Do they lose money every quarter, but not a crazy amount of it. So it's just not really a growthy business. They have been beating on the expectations every quarter. So that's kind of the good news. They're beating on expectations. So maybe it won't be as bad. But yeah, do be careful. That's just a really small market cap. So let's look at Figma right here, FIG. And then we'll look at wait, FIG. This is Figma. So I actually know someone who made an app using Figma. He has an app on the App Store, use Figma. And this is actually a stock that's on my watch list. They actually have really good financials. Again, this one just IPO'd, so there's not too much history, but for the history we do get, things look pretty good here. If you look at the revenue's up 41% year over year. Very nice revenue growth, went from 156 to 250. And out of this 250 mil of revenue, they did 30 mil in net income this quarter. 44 mil in net income last quarter. This was their IPO fee, so don't really worry about that huge loss right there. But anyway, or actually, I don't think it was. Never mind. But they have a good balance sheet as well. I really like Figma. They're really growthy. They're making net income, and everything seems nice there. I don't know about the valuation, though. Hypothetically, if you had to pick one of these forever, Bitcoin or the S&P 500, what would you pick? You know, Mike, I just picked the S&P 500 just because I just picked the VOO, the S&P 500. You get the dividends, you know, seems safer to me. So Ash, what up? He said AppLovin. Oh, wait, no, we got to look at Netflix. Then we'll pull up AppLovin after this. AppLovin just got added into the S&P 500. They deserve it. Hey, what up, Ito? We'll look at CRMD after this too. Cormetics, I own them as well. So here's Netflix. This stock is at an all-time high pretty much. They deserve it as well. Extremely growthy company. The high valuation, though, that's the one thing I will say. They trade at 52 times net income. Pretty expensive. But here's a really cool metric we get. This is their premium subscribers. You know, it's 301 million up from 260 million. So that's a very nice growth in their total subscribers, and also their average monthly revenue per membership is $11.69 a month they're collecting. Pretty cool. Here's the best part though. If you look at the revenue's up 16%. So revenue's up 16, but the net income is up by 45. They're expanding margins. You know, it's so predictable. Subscription model company has 28 to 30% net margins, making 2 to 3 bill in net income a quarter. Free cash flow is just as good as well. So yeah, Netflix prints money, you know. Their Squid Games is doing good, I think. So yeah. So Ricardo said Qubits or Hood. Yo, I would pick Robinhood stock. I love this stock right here. Oh, wait, hold on. Yeah. Robinhood and AppLovin both just got added into the S&P 500. So if you set money, every American who sets money away every month in their retirement account, some of it goes in the S&P 500, and now some of that will go to Robinhood and some will go to the AppLovin as it trickles down. But check this, so much passive money will go into Robinhood. But here's why I love Robinhood. I do own them. They're my best performing stock of all time. I'm up like 9x on them. But check this out right here. The revenue is super growthy. Revenue went from 682 to 989 mil. And out of this 989 mil of revenue, 390 million of it was after-tax net income. These brokerages have insane margins, just like food too. They have like 30 to 40% net margins. Their gold subscription is going crazy right now, making them a lot of money. Their assets under management are flying up higher. They're beating on analyst expectations. So Robinhood is just a beast. Another stock that just got added into the S&P 500 is AppLovin. This is another stock that I believe deserves to be at an all-time high. I would love to own this company, but not at their current valuation. They traded a really expensive multiple, but this is why they for sure deserve a high premium valuation. The growth is insane. The revenue's up 78% year over year, and out of that 1.2 bill of revenue, this is the insane part. The net income, they did 820 million in net income, up 165% year over year. It just hits a record every year, every quarter. In the margin expansion, they used to have already fantastic margins, 35 to 45% net margins, but they just had this blowout 65% net margin quarter. That's a better margin than Nvidia does. Like the gross margins here are 90%. The business just runs itself pretty much. They don't need any employees. They just collect advertising revenue. It's insane. They don't really have any real competition either. So AppLovin's a beast. They deserve to be at an all-time high. I definitely wouldn't buy them at all-time high though. So yeah. Forgot MRVL. Oh yeah, what up, George? That is my bad. Sorry. Thanks for reminding me. So yeah, this is Marvel Technology. They're one of the cheaper chip plays out there, and the next quarter is going to be the most important quarter for them. So get ready for some volatility, because check out what the analysts are expecting for their net income to do. EPS is net income, and it's expected to go, or look at this quarter. If we zoom out, they used to lose net income every quarter, a couple hundred mil. Now they're making a couple hundred mil in net income a quarter. This 194 mil of net income is the same as 22 cents of EPS. So they did 22 cents of EPS, but next quarter is expected to be $1.40, which is going to be over $1 billion of net income. So next quarter should be extremely important for them. So watch out for that. Yeah, they're like a chip play. I like it that they're finally making some good profits, good net income. So yeah. Someone said, can we look at TIGR? What is Tiger? Let's do it. So Up FinTech right here. Okay, I think I've heard of them before. They're on my watch list. They're still pretty tiny though. Do beware. They're worth $2 billion exactly. So it's a $2 billion company. But here's what I really like about them. Oh, check this out. Here's their paying clients. Actually, this is great news. Their paying clients went from 0.98 million to 1.19 million. So their paying clients really went up crazy year over year, and so did the business. The revenue is up 58% year over year after going 33. They're net income positive on that too. There's no way, and that's real. So what's the margins? 30% net margins on this company. That's actually insane. They're making crazy net income. Yeah, they're on my. I'm going to re-add them to the top of my watch list. This one could even have some more upside potential. Like they're trading right now. What was the multiple again? Yeah, 16 times net income. That seems pretty fair. I like TIGR. So yeah, what up, Ito? He said, is CRMD a good stock to buy now? I really like CRMD, but I wouldn't make this stock as a meaningful size position, and here's why. I normally don't recommend these kind of stocks, and I do own them. So first off, do beware, I might be biased when I go over them, but here's my Roth IRA. One of the stocks I own in here is CRMD, and again, as much as I love this stock right here, I only have $200 in it. I'm down 18% on my position, so I put $250 in here. Again, if you end up liking this company, I can't stress this enough, don't make it a meaningful size position. But here's why this company, in my opinion, could be a 3x potential. And I'll just show you the numbers for yourself. You do your own math. So look how much the whole company's worth. The market cap is $836 million. So kind of remember that in the back of your head. The whole company's worth $836 million. And this company literally has no debt at all and $190 million of cash. So literally 30% of the entire market cap, the valuation you're paying for, is just their cash on hand. That gives them tremendous freedom. That's a huge safety net. They don't owe anyone any money, no debt on the books. And so a huge chunk of their market cap is just cash. They're making interest on their cash, and they're really growthy. Sales went from, nothing, 29,000 a quarter to 39 million, a new record. And here's the best part. Added this 39 mil of revenue, 20 million of it was after tax net income. So here's a company that's worth 800 million that's going to be making 20 plus million of after tax net income a quarter with $190 million of cash, really growthy. That looking, even the analysts are expecting that too. Remember, the net income is expected to go from 28 to 69. Like that's insane. The revenue is supposed to go from 39 mil to 101 mil. They just acquired. So right now, this company only sells one product. They sell deaf and calf. It's only one product, but they just acquired a business that'll give them 7 other products to sell. Anyway, I just made a YouTube video about them. If you want to learn more about CRMD, go watch my second most recent YouTube video. Again, that's the best way to support me. Subscribe to my YouTube channel. My YouTube channel is called Nathan Robert. You can just type it into YouTube, Nathan Robert. It's also in the link tree in my bio. But yeah. Which company's going to buy out TikTok? I have no clue, but I hear that keeps getting extended. Have you done the trade desk? I have not actually. And hey, what up? Oh, well, look at Calmain. I love ticker symbol CALM. We have to look at them next. But yeah, here's the trade desk right here. Unfortunately, this one has not done too well. This is a CTV advertising company. And here's the unfortunate part. Even after their huge dip right here, after falling so crazily, they're still expensive. They're still trading at 53 times net income. So they're trading at 53 times net income. It's okay to have a high valuation as long as you're high growth. And unfortunately, there's some red flags. So if we look at the revenue, this is pretty good. The revenue is up 18, but the net income is only up by 6. So what that means is their net margin fell by 11% year over year. So the margins did fall a bit. They lowered their guidance. They're seeing some increased competition from Roku and Amazon. They also just lost Netflix as a partner. Netflix used to use the trade desk to find ads for their advertising tier subscription. Now Netflix goes through Amazon. They switched up on them, switched from the trade desk to Amazon. So I still like this company. They're still making a good chunk of net income, but the valuation's too high even right now. I think it could take another it could fall another 10, 15%. I hope it doesn't, but I wouldn't be shocked to see that one maybe fall a little more. So let's look at CALM right here. This is a chicken egg company. I do own this one. I'm barely down on, or barely up maybe. No, I'm barely down on them. Look at this. I have 7 shares of CALM. I own this stock for a reason. They sell chicken eggs. And here's what I love about this stock. So yeah, conventional shell egg sales, that's boomed, it's up 92% year over year. And if we go right here to their specialty egg sales, this is up 31% year over year. So they're the most profitable they've ever been. Also, I will say, here's another thing that takes a ton of risk off the table. This company has 1.4 billion of cash. Remember this, 1.4 billion of cash, and the whole company is worth 4.85 billion. So over 30% of the market cap is their cash on hand, and they have no debt, so they're debt free. 30% cash on hand, printing net income. I mean, they're making a couple hundred mil in net income a quarter. It is going to go down in the future because egg prices are abnormally high right now. They've had some abnormally high pricing power. But another really cool thing is they change their dividend every quarter. You get an insane yield, a 6.7% dividend, safe payout ratio. The dividend changes every quarter. Like it was $3, then $2, and $1. So anyway, it's exactly $100 a share right now. It's kind of funny. But yeah, I do own this one. I might be biased, but that's your chicken egg play. They just sell a commodity. That's why they trade at a low valuation. Trade at 4 times net income. It's crazy. So, what up, IDK? He said Berkshire Hathaway, BRKB. So yeah, Berkshire Hathaway, this is Warren Buffett's kind of like company. They're kind of like an alternative to the S&P 500, and they've outperformed the S&P 500. So check this out right here. Sales went from the price went from 230 to 500. So they might have done a little better than the S&P 500. But yeah, they own Geico. If anyone's heard of Geico before, that's 30% of the whole sales here. They're like an ETF. They're in manufacturing. They own McLane, the Pilot gas stations. So they're in a lot of different industries. They don't pay a dividend, but they do tons of share buybacks. The revenue fell 1.2% year over year, but they have like huge stakes in like Apple and all this other stuff. So yeah. What software are you using for all this info? Yeah, hey, by the way, I'm on a brokerage right here. It's where you buy stocks on. If you want to get this app, I'm on at an all-time low. So yo, watch out. Yeah, we don't really cover these kind of stocks. If you look in the top right, the whole company is only worth 15 mil. I mean, that's an extremely small market cap, $15 million. Commercial and wholesale, house of brands. 60% of the revenue comes from Germany. What do they sell actually? Let me see. Profile. So they're in medical products. So yeah, I just be very careful. Like the revenue is down 5% after falling 26. They're losing net income every quarter. I mean, nothing's really blowing me away there. So I just be careful with that one to really trust it. So yeah. What's your average cost on Calm? Well, I was only pretty much what it's at today, I'll show you. I'm down 0.59%. So yeah, my average cost is $101.40. But also do note this as well. I've received so many dividends. Like I received that $2.50 dividend, which was an instant 2.4% return. I received this one, a $3.50 dividend. That was another instant 3.5% return. So when you include the dividends, I'm actually up probably like 7% or more. Just because the yield is crazy. Yeah, a lot of your returns from Calm Main will probably come from the dividend over time. So yeah. Okay, let's see here. GoPro, you know what? This company just isn't a good stock. There's so much Chinese competition, and we've all heard of GoPro before, those little cameras, but they just burn through money. Like, here's why you got to avoid GoPro, in my opinion. If you look in the top right, they're worth $380 million. So kind of remember that the whole company's worth $380 million. You're buying a business that's losing a lot of money, 50 mil, 16 mil, 37 mil, like 339 mil. That's like the entire market cap right now. So they just can't get profitable. They just burn through that's a huge, so they're losing all this net income, all for a business that's just not growing. Like the revenue's down 18% after falling 22, after falling 4, after falling 4. So it's just hard to trust GoPro. Maybe it could be like a rebound play, but I don't know, man. Financials don't look too good there. They have been momentuming up. A lot of like trash momentum has been like doing good recently, but yeah. Kodak coming back. What's the ticker symbol for that one? So Brian said Lyft. Hey, yeah, let's do Lyft right here. They're like an Uber competitor. Oh, Rocket Mortgage. Yo, Rocket Mortgage is rallying on the interest rate cut. And they're acquiring Mr. Cooper. So here's Lyft right here. They're like an Uber competitor, and they're finally like a justifiable buy because they're finally profitable. If we go to their net income right here, they're finally making real net income. 40 mil, 3 mil, 60 mil. And if we zoom out, it used to be a tough buy. They were losing, a couple hundred mil a quarter. It was a tough purchase, but now it's a profitable company, making free cash flow every quarter, growing. So yeah, they're like an Uber competitor. Rumor is like Tesla could acquire them. I don't know. But yeah. Oh, and Lyft just did a partner with Google's Waymos. Lyft is now offering Waymos on their app. So yeah. Do you trade crypto? I actually do not trade crypto. I don't own any crypto, by the way. So someone said Dave, or who? Joel, what up? He said Dave. So yeah, in burner mail. Hey, thanks so much for all the roses there, burner. I do really appreciate that. But yeah, here's Dave right here. I do own this stock right here. I might be biased. I am a shareholder. I'm up like 3x on them. They've been one of my better performers. I've taken a bit of profits on them. I've sold over half of my original shares. But they're just so growthy. They're beating on every expectation. Like, look at this. The revenue, the orange lines, the revenue analysts expect, and they're beating on revenue. This was a one-time adjustment. They technically made more net income than that. And the EBITDA was really good too. So they're blowing up. So if we go to the revenue, it's up 64 after growing 30. They're making net income every single quarter. The free cash flow is really the main winner here. The free cash flow is insane. Really good balance sheet as well. Assets are growing every quarter. So yeah, Dave is a fintech. They're a great company. So what up, Elo? He said AMPX. What's that company? This is Amprius Technologies. Oh, I remember this stock. So they are on my watch list, and look at the momentum. They're at an all-time high. So yeah, no crypto. Yeah, hey, I kind of wish I owned crypto. You've seen how good Bitcoin's doing. But I own Robinhood. I own a lot of stocks that like move with Bitcoin, like SoFi, Robinhood. So yeah, anyway, look at AMPX right here. Check out the analyst expectations specifically. So the revenue is expected to go from 10 mil to 20 million. So that'll be 100% year over year increase. They constantly beat on their expectations. They beat on revenue, they beat on net income, and they're beating on EBITDA. So triple beat quarter. They sell batteries. So battery segment. Yeah, that growth is really good, up 350%, and analysts are expecting it to continue to climb up higher. They are still losing net income, but the losses are improving very nicely. Lost 50% less, good balance sheet, deleveraging. So they're just a really growthy company. I'd be careful because they're still small, but yeah, I can see why they're doing so good. So what is this one right here? UMH? Wait, someone said UMH. Are you talking about UNH or UMH? So yeah. What up? Aaron said PFSI. Oh, what up? JC said Newmont. Yo, well, remind me to look at NEW after this. What is PFSI? So PennyMac Financial Services. Oh yeah, they're like a bank, I think. So they're a $6.6 billion company, and the stock is at an all-time high. So yo, first off, congrats if you own this stock. You gotta be up on your position. Let's go see how they're doing though. Do they pay a dividend? They do. You get a 1% dividend with this stock, and look how safe that payout ratio is. The payout ratio is only a 17%, so they actually have room to raise their dividend. They trade at 17 times net income, which is fair for the industry. Yeah, the industry average is a 22. So they're in production. Wait, so they're not really a bank, or production revenue's up 40% year over year. Servicing revenue is down 15% year over year. Let me see the total revenue. So revenue's up 9.5, and they're making that's good 25% plus margins, right? Yeah, 30% margin. You're making nearly 100 mil of after-tax net income every quarter. So these profits look great. So yeah, they're at an all-time high. That's crazy. Congrats if you own them. So NEM right here, is this Newmont? So yeah, this, I believe, is just a gold company, and they've done insanely well. They're pretty much at an all-time high right now because the price of gold's at an all-time high. They have a 1.22% dividend yield, so it's kind of like you get exposure to gold with the yield. Like they own Nevada gold mines and some of these other mines as well. Those are the names of them. But basically, yeah, if we go to the revenue, it's up 20% year over year. The net income's up 150. They did $2 billion in net income. What was the margin? Wow, it's like a 39% net margin. That's insanely good. So they're making so it's like you get exposure to gold, but with a yield. And here's the actual price of gold. It's ticker symbol IAU, and gold is literally at all-time highs right now. So yeah, congrats if you're in gold right now. UMH for the dividends. Let's check it out. UMH. UMH Property. So this is a REIT, a real estate investment trust, and these don't really outperform in the long run. Like if you look at the stock, it's the exact same price that it was back in 2003. So yeah, you get the nice 5.9% dividend yield, but you don't really get that appreciation. Like same price that it was back in 2003 is a little tough, you know? So that's what I would warn you about. But yeah, you do get the nice dividends. The dividends come in monthly or yearly. Oh, yeah, it depends. Most dividends you receive come in every quarter, so every 3 months. But there are some companies out there, like I do own one, like Main Street Capital, MAIN. They actually pay a monthly dividend, so you get you get a paycheck every month from them, which is pretty cool. But yeah, if I go to like this portfolio right here, if you look at the top, it's called dividend only. This is my dividend only portfolio. Every stock in here pays dividends quarterly. So yeah, like McDonald's, Google, Meta, they all pay every 3 months. So what platform are you using? Yeah, hey, what up, Messi? If you want to get this app I'm on, it's actually a software. It's where you buy stocks on. But yeah, if you want to get this brokerage I'm on, it's in the link tree in my bio, the first link there. What's your largest holding? Yeah, my largest holding is ticker symbol FIX, Comfort Systems. I haven't taken a single share of profit ever on that stock. And yeah, we're up 117%. My largest holding by far, by far. So, and they grew to that position. They used to not be my largest holding, but they grew to that position. So, Belly said DPRO. What is this one right here? So this is Dragonfly. So only worth 100 mil. Do be very careful. You know, that's an extremely small market cap. They're worth $100 million. They sell drones though. But yeah, they have no sales basically. If you go to the revenue right here, the revenue was 2 million this quarter. Did they lose money? Yeah, so they're losing 4 or 5 mil a quarter. Not the end of the world. They have a really good balance sheet. Did they just issue shares? Yeah, so they diluted you by 25 million, but you know that's that fortified their balance sheet. I don't know about this. Oh, they're a Canadian stock. So actually, we got to convert their currency from Canadian to USD. So the revenue is actually 1.5 mil. It's just a really small name, like so tiny. If I'm looking for a drone play, I'd rather go with a Red Cat, RCAT. Yeah, if anyone's looking for a drone play right here, this company just got their new Black Widow drone NATO approval, so they can sell it to NATO. Actually, if I go to the weekly news here, Red Cat partners with SafePro for AI drone protection. Okay, anyway, it's not showing it anymore because it's been over a week, but basically Red Cat, their new Black Widow drone just got NATO approval, and check out the expectations for this drone stock right here. Revenue was 3 million this quarter, you know, pretty much nothing, but look at what the analysts are expecting the next 2 quarters. 25 mil, 45 mil. So watch out the next couple quarters on Red Cat. Could be interesting. So, all right, what up, Daily? He said CHA stock. So let's do it. So this is, I don't even know how to pronounce that, but it's at an all-time low right now. So yikes, they did just IPO not that long ago. So unfortunately, we won't be able to view much of their financials. So self-operated stores and partnered stores. So most of their stores are partnered. So do beware. Do know 100% of the revenue comes from China. So this is a Chinese company. So the revenue doesn't come from like the US. But something just happened. So their net income, it just like fell. But maybe it was a one-time adjustment. I don't know. Anyway, I wish I'd give you more thoughts on them. Looks like some kind of Chinese store company. Hey, Jim, I do not mind. Yeah, let's do Oracle right here. This is one of the major cloud plays right now. And Oracle just got a huge deal. Oh, I forgot. Was it with OpenAI or something? I don't know. But Oracle has gone nuts recently. And check this out right here. They reported earnings and their billings growth was up like 350% year over year. Like insane future growth coming. They're opening up 30 new data centers. And that it really helped out the whole AI ecosystem. But check this out. Yeah, their cloud and software revenue is most of their business. And if we go to the net income, they're making a good amount of profits. They're making, if you average it out here, they're making over 3 billion of net income every single quarter. Did fall a bit year over year. Again, the actual quarter, this quarter, they missed on revenue, they missed on net income, they missed on EBITDA, but it was the guidance, the really great guidance that sent Oracle up. Charge your phone and please check Hive. Yo, I wish I could like say good things, but this is just like a Bitcoin mining company. And these, like you look at Marathon Digital, CleanSpark, Hive, like these just don't, none of them ever have actually outperformed Bitcoin ever. So in my opinion, these are all just not like they're pretty trash. Hive is trash. Like they just can't keep up with Bitcoin. They never do. So anyway, you really just look at the balance sheet for these because all the assets that they own are their Bitcoin, and that's how it goes up every quarter. But yeah, I just can't see them. They just traded their net asset value. You know, their assets were 700 mil. The whole company's worth 800 mil. So they traded like a slight net asset value premium. But yeah, like even ClearSpark, Marathon, they just don't outperform. Unfortunately, what I'm trying to say there is just buy Bitcoin. Just buy Bitcoin. Like here, I'll pull up Marathon as well for you real quick. MARA. MARA. So yeah, like look at this one as well. It looks the same. Like Bitcoin is well above where it was in 2021 when this one has been flat for 5-6 years. And yeah, it's unfortunate. Anyway, let's keep going here. Let's see. Oracle and the TikTok too. Oh, hey, that'd be interesting. Oracle buys TikTok. I did hear about that. Bitmine. Yeah, this is basically what we're just looking at. This is an Ethereum mining company. So if we go to this company's, where does the revenue come from? You know, 91% of the revenue comes from their self-mining. You know, it's either they're mining Bitcoin or Ethereum. So it's another crypto play. Again, I hope this one outperforms Ethereum in the long run, but they just don't really do that. So yeah, my advice, just Hut 8 mining as well. Yeah, hey, thanks for that one too. Like Hut 8 as well. Another stock that just like hasn't kept up with Bitcoin. It's down 50% plus off its all-time high, and Bitcoin is at all-time highs. So yeah, I think Hut 8 doesn't purely do Bitcoin mining anymore. But let's see here. Let's Impata said PL stock. Is that Planet Labs? Okay, so this company, wow, is nearly at an all-time high right now. So first off, congrats if you own this stock right here. You know, you got to be doing good on your position. Oh yeah, so here's why. You know, look at this huge beat. Like the analysts were expecting 66 mil. They reported 73 mil. That was a huge beat on revenue. They beat on net income expectations and on EBITDA. So it was a triple beat on every metric. Go to the revenue. The revenue's up 20. Net income losses narrowed by 41. So that's good news. The cash flow looks great. Oh, whoa, hold on. Look at this. Google, or Alphabet, ticker symbol GOOG, is the largest shareholder. Alphabet owns 10% of the entire company. So that's actually pretty interesting. It's backed by Google. So I own some of them technically because I own Google stock. So hey, Google sees some value in them. What app is this? Yeah, hey, again, if you want to get this app I'm on, it's in the link tree in my bio. The first link there, it's at brokerage. VOO. Oh, I love this ETF. This is just the S&P 500 right here. You basically, you know, I love the stock market. You know, you're not buying it to get rich. You know, you're buying it to build, you know, just preserve and slowly build wealth. Like with the S&P 500 with stocks, it's not get rich quick. It's like you get 8% compound a year. And like you turn $100 into 108. And then the 108 turns into 120. Then the 120, it turns into 100. Like it compounds up at 8%. It's great. So yeah, and it owns all the best companies by market cap. NVIDIA, Microsoft, Apple, Amazon, Meta, Broadcom, Google. I own all these companies individually. And I do own most of my stocks are in the S&P 500. You know, I got Amazon, Coca-Cola, Google, Meta, McDonald's, Constellation Energy, United Rentals. They're all in the S&P 500. Amphenol. So yeah. Let's see here. Hey, what up, Ralphie? Good to see you, man. Good to see you again. Ethereum or Bitcoin? I'd go with Bitcoin. I know you can stake Ethereum. Hey, what up, Louis? He said GCT. This is Giga Cloud Technology. Yeah, this one is on my watch list too. Oh, can we look at Salesforce? Yeah, we'll look at Salesforce after this too. So yeah, Giga Cloud Technologies, they're kind of diversified. Like check this out, you know, off-platform e-commerce, Giga Cloud 1P, last mile delivery service, warehousing services. So anyway, if we go to their total revenue right here, though, they're very diversified. The revenue is only up 3.7% year over year. So, but it is kind of tough comparing it because the revenue did double 103% from the previous year. So, but best news, the fact that they're net income positive. They're making pretty much over $3 million of net income every single quarter. So great net income numbers. Deleverage their balance sheet too. I do just want to kind of see the growth come back. Even though the revenue is only up 3% year over year, that still beat like crazy versus what the analysts expected. They beat on every metric. Wow, that's crazy. Do you know any good cybersecurity names? Yeah, my favorite cybersecurity name is actually Nancy Pelosi owns this one. Is PanW Palo Alto Networks. So yeah, if you're looking to get into the cybersecurity industry, dang, they're at an all-time high now. I wouldn't. I don't love them over $200 a share. I'd try and get this one under 200. Pretty sure it'll go under 200 eventually. I don't think for the rest of time it won't go back under 200. But yeah, Palo Alto Networks, this is your main cybersecurity play. And I love them because they're a subscription model company. 55% of the revenue comes from their subscription model business. Analysts love it. It's all predictable revenue. And check out the growth. It literally just hits a record every year, every quarter. A big, like I think over half of the S&P 500 are customers of PanW. So the subscription revenue is just insanely good. They're profitable. They're making a couple hundred mil of after-tax net income a quarter. They're making insane. They made $1 billion of free cash flow this quarter. That's what FCF stands for, free cash flow. Like they just print money. So PANW, Palo Alto Networks, is my favorite cybersecurity pick. So let's see here. BlackRock, yo, hey Marcus, dude, good to see you, man. Yeah, let's look at BlackRock stock. You know, they just released their Bitcoin ETF or their Ethereum ETF and their Bitcoin ETF a bit before that. And that's really led to a lot of the growth in one of their businesses. Like, obviously, we know BlackRock is an asset manager. Like, if you ever go to the shareholders of a company and you see BlackRock as a main shareholder, that's because it's in one of their ETFs. So check this out. Yeah, 35% of the revenue comes from equity, fixed income, and then they have their alternatives. And their alternatives business is their Bitcoin ETF products, their Ethereum ETF products, and it's growing insanely. You know, it's up 71%, 81%, 62%. Like ever since they released it, this business has just like rocketed up higher. So anyway, if we just go to their net income down here, they're making easily 1.7 billion in net income a quarter. The revenue's growing double digits. So I really like BlackRock. You also get a lovely dividend, a 2% dividend. They raise their dividend every year. So BlackRock's great. I would just buy and never sell them. You're going to look at AGMH. Let's do it. What's up, Hem? He said AGMH stock. Hey, try not to spam there. What up, was? Yeah, we'll look at AMD after this. Don't worry, I got you. I do own AMD, so... but yeah, we're actually not going to cover this stock right here. So they're only worth $30 million. This is some like trash micro cap. They're worth 30 million. The stock's at an all-time low. Do they have sales even? This is from 2021. So no, they don't have sales. So yeah, I'd just be super careful. I probably wouldn't even touch that one. Just because it's legit a $30 million company. It's like, how can you trust that? So anyway, here's AMD right here. I do own this company, so I might be biased, but I own AMD for a reason. You know, if we look at, I wish I owned NVIDIA low key, but here's why I chose AMD over NVIDIA. Because if you look at this market cap, it's a $255 billion company. If we go to NVIDIA, for example, NVIDIA is worth $4 trillion. For you to double your money on NVIDIA has to be worth 8 trillion. So the law of large numbers is starting to hurt NVIDIA. But here's what I like about AMD. Which is like still a year behind NVIDIA, but they have a huge GPU market share of 17%, PC GPU market share, obviously. They're in client and gaming. And then the data center business, this is what's really been growing recently. You know, data centers need GPUs, they need graphics card, and you know, AMD makes their own graphics cards so they can supply them the cheapest and the quickest to their own data centers. Check out the free cash flow. It's insane. It's up 4x year over year, 1.7 billion of free cash flow. Revenue's up 31. You know, this company's no longer advanced money destroyer. They're profitable every quarter. They made 900 mil this quarter, 800 mil. They have a monster balance sheet, no net debt on AMD. So I do own them. Here, if you want, I'll show you my position. So I might be biased, but yeah, I do like them. AMD, yeah, the blue line right there is where I bought my shares. So I have 11 shares of AMD at 124 a share. Like, we didn't even time the bottom. Like, the bottom was $76. Like, we bought at 125. We didn't even time the bottom, and we're still up a good chunk. So they've been really growing recently. They're still at a pretty expensive valuation, though, right now. So I wouldn't make them a huge position, especially at this price. So, all right. So, hey, what up? Plasma said ATRO stock. Astronics. Yo, and Francisco, we'll look at Alibaba too after this. Yeah, hey, by the way, if y'all want to hit the follow button, we stream every Sunday this exact same time. I have to go in 20 minutes, but we're going to be streaming in exactly 6 hours from now. So if you want to hit the follow button, we're going to be streaming in exactly 6 hours. We're going to do another 2 to 3 hour stream. But yeah, we've been streaming for over 2 hours now. This is fun. So yeah, they're an aerospace stock. It looks like oh wait, hey, we already looked at this company, Plasma, like 10 minutes ago. So yeah, basically aerospace company. They're a really small one. Let's see. Oh yeah, let's go to Alibaba right here. So what platform do you use? Yo, Alex, yeah, if you want to get this app I'm on, it's a software, it's where you buy stocks on. It's in the link tree in my bio, the first link there. Affiliate link, full disclosure. Hey, what up, Louise? He said, can you look at Unity? I'm already taking profits. So the thing with Unity is, that this is the platform that made Rust. Hey, Puck. Yo, no way there, Puck. Dude, thanks for all the gifts there. The cocktail, the roses. I really appreciate that. You got a stock you want me to look at? Let me know there, Puck. I got you, my friend. So yeah, hope everyone's having a great Sunday, by the way. And here's why I would be very careful with Unity. Here's the tough part, in my opinion. First off, the business isn't really growing. The revenue's down 2% after falling 15%. So the growth is kind of gone on Unity, and they're losing a lot of money. Like, if you average it out, they're losing over 100 million in net income a quarter. So that's the one thing that does concern me with Unity. And that's why I actually think it was smart of you to take profits on Unity. Maybe trim a little bit of your position. It's tough. It would be tough to trust this with the big chunk of your portfolio with these kind of financials. Losing a lot of money, negative growth. So I wouldn't call you crazy. Appreciate your work. Love from India. Hey, thanks for always showing up here, Ravi. Hope you're having a great day. AMD said last earnings that this is a slowdown in data centers and it couldn't dip back to 125. That last earnings said that is a slowdown in data centers and couldn't dip. I don't know. Is that good? What do you think about UiPath? Yeah, UiPath is a stock I wouldn't touch. That's actually my biggest loser. I wouldn't buy them. It's just not a quality company you want to own. And I'm down 43% on them. I'm actually trying to actively get out of my position. So yeah, full disclosure, I like showing my winners and my losers. So by the way, I'm not an expert. I sell nothing. I have no course, book, WhatsApp, none of that. Did you make a new account? No, this is my only account. Hey, what up, Sum? He said, did you make a new account? No. Watch out for people impersonating me. This is my only TikTok account. Well, I have one other TikTok account, my backup one for when this account gets banned. But yeah, basically, this is my only account on TikTok. I'll never follow you, DM you. Watch out for people impersonating me. I sell nothing. And here's Salesforce. This is a cybersecurity company. Is this app free? It is free. Yeah, if you want, by the way, I'm on a brokerage. If you want to get this app I'm on, it's in the link tree in my bio, the first link there. If your account gets banned, actually, hey, what happens a lot on my TikTok is they'll take away my live streaming access for 3 days. It's happened to me over 10 times, easily over 10 times. Basically what I'm trying to say is best way to support me is subscribe to my YouTube channel. My YouTube channel is called Nathan Robert. It's also in the link tree in my bio, but you just type into YouTube Nathan Robert, you'll find it. I'm streaming on there as well. So if you miss anything, you can replay it. And if you're ever on the stream and you just randomly see it, like my stream just abruptly ends out of nowhere. I never said I was going to end the stream. That means TikTok took it down and I'm still streaming on YouTube. But anyway, here's what I love about Salesforce. This is a software company, really relies on the white collar job market. But check this out right here. I love how diversified that they are. They're in services, sales, platform. They own Slack. Like they legit have some of the best assets out there. They own Slack, integration analytics, marketing, commerce, and they're finally really profitable. If you go to their net income, they're making 1.7, 1.9 billion in net income a quarter. They still trade at a pretty high multiple though. Well, not extremely high, but they're trading at a 35 times net income. They just acquired INFA stock as well. Was that included this quarter? It was not included this quarter. But anyway, yeah, that's Salesforce right here. I like that they're net income positive, but a lot of the software names have been getting hurt from the hey, thanks for subscribing, Eric. I appreciate that. But yeah, I think they're really being hurt from the AI thesis that like AI, agentic AI or whatever could replace Salesforce. I don't know. AMD could dip to 125. Oh, okay. That makes sense. Sprouts has been a pretty cool company to watch come alive. Oh, hey, what up, James? Yeah, I love Sprouts Farmers Market. I am down on them. But yeah. Yeah, check that out. I am down 12.5%. Why is Unity going up? I have no clue. I have questions for why a lot of trash stocks are going up right now. But markets at all-time highs, a lot of momentum-y stuff. I've seen this a lot of bad stocks that are doing good. It's propped up on how good Palantir, Tesla, and Bitcoin are doing. Like how propped up are things right now? Okay, so what do you think about Michael Burry 100 million purchases of Lululemon? Yeah, hey, Lululemon, this isn't a company I love. Here's the thing: their North America sales, their main market, North America. The sales were only up 1% year over year. That's not great. But their international sales were actually up 25% year over year. They lowered their guidance as well this quarter. They said increased tariff input costs. So that's why if we look at the sales are up 6.5, but the net income was down by 5.6. So that means their net margin fell by 11.3% year over year. Not great for the margins to fall that much. Plus the lowered guidance and the poorly timed buybacks. If you go right here, they're making a couple hundred mil of net income a quarter, which is great. That's what I actually like about Lululemon. They're making a couple hundred mil a quarter, and they just deployed all to share buybacks. Unfortunately, these were poorly timed. They could have bought like 30% more shares if only they waited. But anyway, I don't love this one because it's just hard for these apparel stocks to like double their revenue, and it's just a tough industry. So exposed to like consumer habits, Lululemon's losing their like brand of self. I've seen like their website sells a bunch of random stuff now. Okay. Hey, what up, Charles? Hope you're doing well. Yes, sir. Hey, by the way, if y'all wanted to follow button, we're going to be live as well in 6 hours. So we're going to be streaming in 6 hours from now when the market's open. So yeah. Rocket. Yeah, what a burner. Let's do Rocket Mortgage. So Rocket Mortgage actually has been, super interest rate sensitive as they originate the loans, and they should capture the refinancing boom. Is when interest rates go lower, people will hopefully refinance their mortgage rates, and Rocket is here to benefit. They also just acquired Mr. Cooper, which is a fantastic company to acquire. Yeah, basically, this is a huge interest rate sensitive play, and as rates go lower, this one should rally. And they just acquired COOP, Mr. Cooper. I love this stock, dude. Great asset to buy. So anyway, what happens is, yeah, hey, thanks. Yeah, if you want to get this app I'm on, it's a brokerage. It's where you buy stocks on. It's in the link tree in my bio, the very first link there. My favorite one. Why are Kroger and these grocery stores going down? Here's my conspiracy on that. So if we go to Kroger right here, really any of the grocery stores, let me go to the daily here. If we look at this candlestick right here on Kroger, this exact day right here, and this is the same for every grocery store. Every grocery store this exact day had this huge decline, and that's because Amazon announced they're expanding their same day delivery of groceries in over 1,000 cities in the US. So Amazon's like the biggest competition for Kroger, Amazon, like Sprouts Farmers Market and Kroger are they're losing to Walmart and Amazon, because Walmart and Amazon can deliver you your stuff the same day. Like it's incredibly expensive for like these other grocery stores to do it, and it probably wouldn't get used that much. So I think that's why, Amazon, that the reason all the grocery stores fell is because Amazon was expanding their same day delivery to over 1,000 stores. And we used it. We tried it. We used their grocery store delivery. It worked great. Actually, we ordered a thing of eggs. 2 of the eggs were cracked. And so they gave us a whole refund on it, which was pretty nice. So what up, Regular? Hey, what up, Improvement? He said New Scale Power. Yeah, give me the ticker. Oh, wait, Regular. Is it NU? New Scale Power. Well, here's NU Holdings. This is a crypto bank out of Brazil. I actually love this company right here. If you're looking for kind of like a crypto stock, this is one I really like. So NU, do beware, 93% of the revenue comes from Brazil, but that's the market that you want to be in if you're a crypto bank. That's where people really use crypto for transactional purposes, because the currency down there in Brazil sucks. But the main reason I like this company is because they have good financials. Like if we go to the revenue's up 28%, and the net income's ridiculous. It's up 30%. They're making 500 mil to 600 mil of after-tax net income a quarter. It's insane. So I'm Warren Buffett and Berkshire Hathaway does own some of this company as well. Pretty interesting. So crypto bank, Brazil trader. Hey, what up, Israel? How's it going, man? Amazon groceries, especially produce is poor quality. Really? Regular? Why is that? I heard like the 365 stores are really good. So, hey, someone said Oklo. Yo, Oklo is a meme stock if I've ever seen. Like this company should not be worth 20 billion now. So Oklo was up 30%. Was there any specific news? I don't think there was any specific news for them to rally up 30%, but yeah, basically this is a $20 billion startup. If we go to they're not going to have any revenue for at least 2 years, I think, if they don't like get their forms in within like the next couple of days. But if we go to the revenue, it says no data because they've never sold anything. They've never sold a product or a service. They lose money every quarter. Not much, but it's insane to pay, in my opinion, 20. That's a pure momentum stock right now. You're buying them for the momentum. If you want a real nuclear stock, nuclear exposure company to just buy and hold forever, check out CEG. The number one purest play for nuclear reactors in the U.S., or for any publicly traded stock ever. They own legit 50% of the nuclear reactors in the U.S., the fleet. So it's crazy. Yo, Adrian, what up, dude? Yo, my phone's on 7. Yo, we'll look at 1 or 2 more stocks, and I gotta go, sadly. What's up from Jamaica? Yo, what up, AI? I hope you're having a great Sunday, everyone. By the way, I am ending the stream in 5 minutes, but if you do want to hit the follow button, we're gonna be live in 6 hours from now. We stream every Sunday this exact same time. We do 2 streams every Sunday, so we're gonna be streaming in 6 hours when the market's open. If you want to hit the subscribe button, by the way, best way to support me, hit the like button on the stream before you go. We'll look at 1 or 2 more stocks here. So let me see. Revival said SPGI. So this is S&P Global. So actually what's cool is this app I'm on uses S&P Global. Like if we go to whenever I show this on the screen, whenever I show the analyst expectations right here, look in the kind of the top left, it says data from S&P Global. So all these expectations are from S&P Global, and that's this stock right here. Also, if you heard of the S&P 500, the name S&P 500, they have to give S&P Global basically royalty for using that name. So yeah, they're in market intelligence, they're in credit ratings. That's their best business, in my opinion. The credit rating business has no real competition besides Moody's. It's a shared oligopoly with Moody's and Fitch. Commodity insights, indices. So I really love S&P Global. They're doing share buybacks as well. So the net income is up by 6.9, but the net income per share is up by 8.3. So they've bought back nearly like 2% of all the shares, plus you get the 0.8% dividend yield. I really like S&P Global. What was that you were saying about nuclear? Yeah, my favorite nuclear play is CEG, Constellation Energy. That's my favorite one. I would stay away from OKLO. That's a huge momentum stock with no revenue right now. So yeah, I'd be very careful with that. But anyway, I hope you guys have a great rest of your Sunday. Again, if you want to hit the follow button, we'll be live in 6 hours. I sell nothing. I have no course, book. I'll never follow you, DM you. Watch out for people impersonating me. The number one way to support me, if you do want to support me though, the number one way to support me is just subscribe to my YouTube channel. My YouTube channel is called Nathan Robert. I'm also streaming on there as well. And when the stream's over, as I'm ending it right now, you can replay it and watch it from the beginning. The beginning of the streams are really fun. So anyway, thank you all for everyone who's going to be here. I'm going to be live in 6 hours from now. We stream every Sunday this exact same time that I am right now. And we stream in 6 hours at 8 p.m. So see you all very soon. Have a great rest of your Sunday. Thanks again. Oh, and if you want to get that app I'm using, that software I was on, it's in the link tree in my bio, the first link there. It's my favorite. It's an application where you buy stocks on. So if you're looking for a brokerage to buy stocks on, my favorite one's in the link tree in my bio. It's an affiliate link too. See ya. And thanks to everyone on the YouTube stream. I'm trying to build up my YouTube channel, so I appreciate y'all. Kudo, Michael. Sorry, my bad for not getting to all the stocks, but see you all soon.